wetu ni nguzo yetu, idumu jumuiya yetu.
Thank you very much. We may be seated. Ladies and gentlemen, my name is Daniel Berunji, and it's my privilege on behalf of the Uganda Manufacturers Association to welcome you today to this symposium. It's our understanding that we have a wide variety of people represented in the room today. We have representatives from ministries, departments, and agencies. We have our dear members, and we also have among us, of course, the board of the Uganda Manufacturers Association. As we go along, I will be doing introductions, and we will try as much as possible to stick to the agenda that is before you. Today's session is really a post-budget engagement. The reason we saw this as fitting to have was because we realized that it's important that as manufacturers, we interrogate the budget and the budget process that has just ended, the laws that have arisen out of the budget process, but also to understand that we have now entered a new era as far as the common external tariff of the East African community is concerned. And it's important that we all understand at our individual company levels what this means. So once again, it's a pleasure and a privilege to welcome you here. It's also my honor to appreciate the Minister of Trade, and particularly the Honorable Minister of State for Industry, who is with us and who has always been with us every time we call. We also wish to appreciate the presence of the Advisory Council of the Uganda Manufacturers Association, represented here by Engineer James Kalibala. Most welcome, sir. Of course, I know that UNBS is here in full force and represented here by the Executive Director, our good friend, Mr. Livingston Ebiru. I know that our sponsors, NCBA Bank, are here in also full force. If you could stand up so that we see where you're seated. In case we need those loans, we know where to run to quickly. You're most welcome, and thank you for the support. They will be speaking to us later. Of course, the Uganda Insurers Association is also here. They're our partner and our friend. Please, Uganda Insurers Association, wherever you are, please stand up. Yes, they will speak to us about matters marine cargo and how it pertains to our operations going forward. I know that we also have Uganda Air Cargo here present, and as we seek to enter the new markets, it's important that Uganda Air Cargo tells us how they aim to push us there. Please stand up for recognition, sir. Most welcome, and we are glad to have you. And in all your distinguished positions, of course, we shall be speaking about who is here as we go along. But allow me to move straight to the program, because as you notice, we have a pretty packed program. And the reason for this is that there were so many things to cover that we felt there was nothing worth leaving out. However, it's also to promise that whatever we are unable to cover here today will be covered separately in individual sessions. We've talked to UNBS. We shall have an individual session with UNBS. Uganda Revenue Authority is also en route, and we shall have individual sessions with them later on, probably in the coming month, and we'll inform you of these. But today we will keep it high level, but ensure that we cover a bit of everything. Now it's my pleasure to welcome the chairman of the Uganda Manufacturers Association, Mr. Deo Kayemba, to welcome us here and give us a brief of why we're here and what we expect out of today's engagement. Mr. Chairman, you're welcome.
Sometimes at this age, you need to be aided by more than one gadget. Ladies and gentlemen, welcome. Thank you for making it this early morning to be here. This shows that you have manufacturing and the Ugandan economy at heart, and you really want to do genuine and good business in this country. Honorable Minister of Trade, Honorable David Bahati, members of Parliament here present, esteemed heads of government agencies, CEOs from private sector, development partners, business leaders, and champions of industry, my colleagues, members of the MA board, our heads of business in the Advisory Council, esteemed members, ladies and gentlemen, good morning. On behalf of the board of Uganda Manufacturers Association and the entire manufacturing fraternity in Uganda, allow me to welcome you to this maiden post-budget symposium. This is the first one of the kind that we are holding, and we intend to hold it every year. So it will be an annual event. UMA appreciates the support government gives to the members through different ministries, departments, agencies, and MDAs. You continue to enable manufacturing to thrive in Uganda, notwithstanding the various challenges. One of the challenges that we have just gone through, as you all know, is the COVID. But the government made Uganda manufacturers, all of us, wherever we are, an essential category. And we continued operating while the other sectors were closed. And I need you to applaud the government for that. I also want to recognize the immense contribution the manufacturers, our members, make to the national development agenda. Currently, we are under NDP 3, National Development Plan 3, and the manufacturing sector has been made one of the targets of NDP 3. That is to increase and sustain quantity of manufactured goods relative to all other exports that the country does. Ladies and gentlemen, before going into the substance of the symposium, I take this singular honor to most sincerely recognize the support that our partners like NCBA Bank, KPMG, Hotel Africana have rendered to the success of this symposium. Thank you very much, our partners. The National Budget 2022-2023 was made under the theme full monetization of Uganda's economy through commercial, agriculture, industrialization, expanding and broadening services, digital transformation, and market access. This presents an opportunity to the manufacturers to interface with the government in a dialogue that should go a long way to better position the manufacturers to contribute optimally to the broader objectives of the national budget and the NDP3. As such, the focus area, as identified by our technical team, together with the anticipated outcomes, should guide our discussion this morning. Some of the outcomes of this morning should be the economic recovery of our country and ourselves as job creators, job creation, and overall improvement of people's lives. This year, the post-budget symposium is themed positioning the manufacturing sector to facilitate the implementation of the objectives of the national budget, financial year 2022-2023. It focuses on the broader objective, as I earlier said, of NDP3 as they relate to the growth of manufacturing as the pillar of national growth. Honorable Minister and members here, despite the rhetoric from government, there are very serious constraints constraining the manufacturing sector and preventing it to recover from the COVID pandemic. The government of Uganda has been telling us that he's going to support the SMEs and the business community to recover from COVID pandemic. The situation has been compounded by the shrinking aggregate demand driven by high cost of living arising from cost of production. Honorable Minister, by the time we live here, we should have found a way and agreed on how government is facilitating business to contribute to the economic recovery of Uganda. As the chairman of board of UMA, I'd like to note a few concerns that are critical to the manufacturing sector growth, meriting strategic attention by the esteemed duty bearers and stakeholders at this symposium. I have a few points, but you bear with me. Let me list them one by one, because they are very key to us. Point number one is the dynamic policy regime and lack of critical laws to guide trade in Uganda is heavily impairing investment planning, and as such, it is an impediment to the growth of manufacturing to the next level. We have companies here in Uganda who are ready to undertake heavy backward integration, like in steel and cement, by utilizing the locally available raw materials, like iron ore, limestone, and many others, which, if done, would save this country in excess of $1 billion per year. And remember, $1 billion is a whole 10% of our import bill. So if we made the first step and say, let's take these two areas and government comes up with all your full force, and the private sector comes up, and we tackle these areas, at the end of the financial year, we could say, now we are 10% less of our import bill. Together with the other efforts, we could make very meaningful contribution to this economy. But because the tax regime keeps changing, every year we expect new things. We expect new rates. We expect this and that. It is difficult for the investors who are going to commit hundreds and hundreds of billions into these projects to plan. I therefore request, I hope Minister of Finance is already here. Let's target our tax policy regimes to our NDP programs. The national development programs are 5 years. Why do we every year go back and change this, change that, change this? Why don't we say, these 5 years we have agreed to do this? This will be the tax rate, this will be the policies, so that we can also start and realize investment in 5 years. So if we stabilize, we can do 10 years, 15 years, and 20. And this is the only way we are going to develop this country. But this short-term business, looking for revenue here and there, change this to get revenue here, change that, no. It is not helping business. The other aspect, instead of getting people doing backward integration, they are doing what gives them the leverage to occupy, to become monopolies. It's because there is no guiding laws. Can you imagine the whole country, Uganda, running without a competition, you know? How do we regulate business? How do I take you to court when you infringe on my rights as an operator? Which law do I use? So the investors we are seeing are coming to take advantage of the vacuum in the regulatory sector of Uganda to occupy the entire value chain and push out the small ones. And this is detrimental to this country. Most of the operators are SMEs. Because we're a small country, we are just developing, we are starting. Most of the businesses, most of the industries are SMEs. If we squeeze them out of business by not supporting them, then we are digging our own graves. If you went to a forest and cut out all the young trees and say, let my big trees thrive, let them have fresh air, tomorrow you will not have a forest. So that's my subject. We need to look at how we grow all together. Number 2, standards and quality compliance is a key business facilitator for sustainable manufacturing and export growth. Relatedly, the easing of implementation of pivotal regime so that manufacturers are not inconvenienced, as indeed envisaged under the official exemption, should be implemented. I saw here the executive director of Uganda National Bureau of Standards. I hope, sir, by the time we leave here, you understand our position and you help us to do our manufacturing seamlessly. We want to have our raw material from wherever they come from and arrive at our factory seamlessly. We want to practice JIT. That's what makes business work. So, sir, when you are addressing us, please touch something about this. Number 3, the reduction of cost of power to the President's target and pledge to all manufacturers, and I stress all manufacturers, of US cents, 5 US cents per kilowatt hour. This remains critical for Uganda competitiveness, allowing for further integration of markets. UMA is excited with the recent amendment of the Electricity Act that allows bulk purchase of power by industrial users without going through any agent. UMA members desire to have a clear power cost reduction trajectory for better investment. We appreciate you, Honorable Minister, for that. But that only benefits those who are in organized industrial areas. Many of us, you see here, are let me tell you to Nyankole. We call Abashambus, the people, pioneers, people who go and Abatembus, that's the right word. Pioneers, people who go find a bush, clear it, put a factory, pay for their power to go to their factories, and pay for everything. And here they are, when the reduction comes, they say, you are in a place that you cannot access, therefore continue paying high. A manufacturer finds, like the gentleman seated near you, finds a location in Kawempe and puts up a factory for transformers. Very critical input, even into the electricity sector. And then when he comes to his own power, you tell him, Kawempe is not accessible by us. Go to wherever, go to an organized industrial areas. But this is our structure. This is structure of our industry. We have invested, we cannot move, so a solution should be found for us. And I beg that the Minister of Energy comes up and very fast with a solution for our Tembus. Thank you very much. Honorable Minister, I would like to turn to Uganda Revenue Authority and the Parliament of Uganda, where you sit. The financial year 2022-2023, in the national budget, saw hefty penalties introduced under the Tax Procedures Code, imprisonment, hundreds of millions of penalties, imprisonment for 10 years. However, penalties cannot sustain tax collection for national development. UMA members require assurance from Uganda Revenue Authority of a much-needed partnership to enhance tax compliance through meaningful tax administration reforms. UMA has made a study and published that study. We are willing to share it with the government on the meaningful tax reforms that can foster compliance. And we don't wish to go back to the past relationships we had with Uganda Revenue Authority, where Uganda Revenue Authority was considered by us as a police unit. And when you say blue car coming to your what? A blue numbered car coming to your factory, you think, what have I done now? What have I done? No, we want to foster the partnership. We want to progress. We don't want to go back. We want to progress. One key cross-cutting concern is one of endless audits, including those relating to way back as 10 years. As such, we appreciate we appreciate that the tax is a price for living in a civilized society. We therefore look forward to Uganda Revenue Authority initiating a strategy that encourages people to pay tax willingly. The same way parents pay school fees for their children. Because we pay, and there are quite a lot of money. It is a pain to pay school fees, but it is a desired pain because you know the future is good. This is what we want to do for taxes. Honorable Minister, when you launched the Africa Continental Free Trade Area, you urged us to move into the fifth gear in terms of export drive. But we have challenges, Honorable Minister, with the exports. Doing a risk-free export business is still a strategic challenge to Uganda manufacturers. I'm sure you remember very well, and that time we were in the Minister of Finance, the events of Southern Sudan, where our colleagues, the traders, lost a lot of money. And the government had to come in with taxpayers' money to compensate. We don't want the government to keep doing this. We therefore request that an export guarantee scheme be put in place by Minister of Finance to mitigate the risks of export. Then we shall be able to export without fear or favor and achieve your objective. UMA members would like to hear plans by the insurance sector regulator on the issue of the export guarantee scheme. Relatedly, we have enabled you through the BUBU policy, and you thought that BUBU was only to benefit manufacturers. But now here we are. We have enabled the insurance sector by going BUBU. There is now a mandatory local marine insurance law that requires us to insure all our imports locally. Honorable Minister, this is the BUBU from us, and I think it should be appreciated. We are leaving our money here to our insurance companies so that they can grow. But in the same vein, our insurance companies should reciprocate by lowering the rates to match the international players. Because if they don't do, we're a business. We need to make money, and we need to remain competitive. The other aspect about the regulator is we have just come out of COVID. And actually, our operations were seriously constrained. We are recovering. We have seen a lot of help from the banking sector by restructuring our loans and helping us to pay slowly. What we have seen from the insurance sector is that they are requiring us to pay 100% for our insurance policies before they are issued. This is not helping business. Some of the businesses that are running big business, this is hefty, going to hundreds and hundreds of millions. And to require me to pay say for all risk insurance, the day it expires, you are asking me to pay 300, 400 million at once. We should be allowed, within the limits of the risk, to stagger payments, just we are doing in the past. Why are you squeezing our hands? We are trying to survive. You are pushing us to fall. Please help us. That's the last one. Honorable Minister, UMA is grateful to PPDA for the reservation guidelines and preferences for national and resident producers in all projects. This has phenomenally pushed investments in benefiting sectors like steel, cement, textile, cables, transformers, and others. However, the key strategic failure is negating the enabling regulation issued by Minister of Finance since November 2021, when UMA shared her comments on the draft regulation that was issued. This delay is unacceptable, considering that 65% of the national budget goes into purchase of goods and services produced by, among others, the manufacturers and service providers. Hence, the need to have a regulation in place to facilitate suppliers to government to supply and recover. There is a good talk about reservation scheme. Reserve this for the local, reserve this for the local manufacturer. But the practice has not been put in the law. Therefore, those ones that are been twisting things in the past still have a leeway because there is no law. We want this to be put in the law. Honorable Minister, UMA is excited about the ESCCET based on the four-band structure as championed by UMA and Uganda. Equally, the Africa Free Continental Area has offered additional market access, just as the case for DR Congo joining ESC. UMA members are anxious to know whether the new ESCCET already applies to Congo. Equally, UMA desires to know from government the strategic intervention in place to foster optimal private sector participation in the export drive. I hope the Minister of Finance will be able to articulate this. Honorable Minister, this is concerning access to credit. At least 87% of credit to the manufacturers and the entire private sector is from commercial banks. This situation is far from ideal, since the reverse is true for leading export nations in especially Asia, Europe, and South Africa, and others. UMA members would like to know of government's tangible actions to reverse the trend. In addition, the issue of dollar shortages in our export market has become a seasonal phenomenon to exporters. As we expand the Africa Continental Free Trade Area, it is our desire to hear from the Minister of Finance on the progress of the East African currency and its acceptable, probable acceptability in the rest of Africa. Honorable Minister, sir, UMA is excited about learning of the presence of private sector development unit at the Ministry of Finance. We would like to strengthen working synergies with the unit to foster NDP3 aspirations. The strategic missing link is the absence of a project pipeline for NDP3 that merit PPPs, public-private sector partnerships. This devoid is partly responsible for the gamblers, speculators that come into Uganda and delay the government, promising heaven and earth. Several UMA members are now of size to partner with government of Uganda for implementation of strategic projects envisaged under NDP3. UMA requires a firm commitment from the Minister of Finance on this, and to have a PPP projects made public for competition. This should include human capital development centers of excellence for technicians needed to support manufacturing and export growth. This is very critical to us. We just hear it in the news. There was this project, it was taken by so and so, and they are partnering with government. We also have some money to invest, Honorable Minister. We have money. We can also get together and partner with the government through the appropriate institutions to take on some of these big projects, and they would like to be part of the puzzle. Honorable Minister, last but not least, UMA is conscious of the need to carry on manufacturing on a sustainable basis in light of the global warming and emerging extreme weather. This phenomenon is already stressing agro production, it's undermining food security, and thereby perpetuating poverty. In the financial year 2022-2023, government committed reasonable budget allocation to this. UMA would like to announce her readiness to partner with the government in respect of developing a strategic plan. UMA proposes that the Ministry of Finance consider introducing tax benefits linked to protection and sustainable operation. This can drive sustainability and benefit the environment. UMA is happy to work with the Minister of Finance, Minister of Lands and Environment, Minister of Trade and Industry in structuring the parameters and developing a tool that can help us achieve. With those few remarks, dear invited guests, allow me to wish you a fruitful deliberation this morning. I look forward to seeing agreement on the next steps post this symposium in terms of action road.
The Vice Chairman of Uganda Manufacturers Association, Mr. Aga Sekalala Jr. Thank you very much. I'll be introducing more as we go on, but I know that the Honorable Minister's time is fast spent, so I wish at this juncture to invite you, Honorable Minister, to please officially open this session, and then we can move on to the next element. Thank you.
Thank you very much, Mr. Birungi, the chairman of Uganda Manufacturers Association, members of the board, and all wealth creators in the room. Good morning. Let me start with a few commercials now that I'm with businessmen before I make some remarks. When the chairman introduced the ED of, is it working? The ED of UNBS, I didn't recognize him because we are used to being in masks all the time. And I thought that he should be penalized for not keeping the standards, the SOPs, because I didn't see him in a mask. Friends, we said, Minister of Health said that when we are inside the hall, we can keep on our mask. And when we are outside and in other free day, we can pull out the mask at social distancing so that we are sure. So the man who is supposed to keep the standards has issues with me this morning. The second commercial is the chairman was struggling to put on the glasses and said he was beating himself. When actually some of us are looking forward to reaching your age because our life expectancy now has increased to 63.3 for women and 62.5 for men. So don't pity yourself that you are growing because we know that age is wisdom, and indeed we have received a lot of wisdom this morning from you. And last commercial is that don't please blame me that I have not used this microphone, because in a previous meeting I told you my doctor eye specialist said if I'm speaking to a microphone near me, it must be near the color yellow, because otherwise I'll have a problem with my sight, and I don't want to collapse this morning here. So that's the reason why I'm having this one. I guess now I'm done with the commercials. I want to thank the chairman for your speech and for the points that you have raised that require policy reforms, and for your commitment to issues of environment. I want to assure you that we take note of those policy reforms that we require to be able to support this sector. And our staff, Commissioner Mtahunga is here taking notes so that after this meeting, this engagement, we'll go back and see how best we can progress those policy reforms that are needed to support the sector. This sector is very, very important. As you know, we are now contributing, as manufacturing alone, 22.9% to our tax. 22.9% to our tax. Isn't it a big contribution? I've seen somebody from URA. The lady from URA, you should really clap for these people alone, because 22.9%, I thought URA would be very heavily present here, because this is an important sector for us. But also, manufacturing alone is contributing 16.4% to our GDP, and the industrial sector contributes 27.4%. So it is an important sector. So Chairman, when I was invited to open this meeting, one of your staff prepared some remarks for me, and unfortunately I'm not using them, because in the remarks, he had said that I should come and thank you for organizing, and then I opened. I said, how can you call a minister to come and say thank you, and the meeting is open? Given that I'm a member of the National Resistance Movement, I resisted that. And therefore, I want to mention a few points, then I'll open the meeting. So it is important that we recognize that this sector, if well supported, can actually take our economy to another level. That is very, very, very important. And because of that, government working with you, there are a few things that we are doing that I want to remind ourselves this morning as you engage, especially on issues of taxes and other issues. I wanted to tell you that government, we are ensuring that there is predictability of tax policy. That's the reason why this financial year, we never took any tax measure for anybody, including manufacturers. We want you to be sure that this tax is coming this year, this tax is coming next year. So the point that you raise it, we are working on it. The other point is that we want to assure you that we are still committed to the liberalization policy of our economy. You come in and invest your money, you are free to take it out. And those of you who are indigenous here, you are free to keep it, or even you yourself to take it out. So you have our commitment to the liberalization economy of our country. And we are doing this in the context of import substitution and export promotion strategy. Import substitution and export promotion strategy. And to be able to support you, I don't know how you are doing with this. We did capitalize because some of the issues that especially small and medium enterprises we are raising, and also some big manufacturers, was access to capital, and especially the cost of capital. And we have capitalized UDB with 481 billion, and we are committed to continue putting more and more. We want you to access this money at a very affordable rate of 12%, 8 to 12%, so that you can invest in manufacturing. So that is there, and we'll continue to put in more money. As the chairman told you, we have been promising you for now 5 years that we shall reduce the cost of electricity to 5 cents US dollars per kilowatt for all manufacturers. This is going to be for all manufacturers. And we had a problem of the laws, which we amended a few months ago. The electricity law now has now been amended and assented to by His Excellency the President. So we are working to see how this is being implemented and want to implement it so fast so that what we promise you, the 5 cents US dollars per kilowatt per hour, is accessed by all manufacturers. And we are starting with those in organized industrial parks because it's easier to get bulk power. Now the chairman and my friend here was also raising, now how about somebody who has invested outside the industrial park? And I think that's the importance of these dialogues. Let's access it, and then we'll not forget you because we know you are not so many outside the industrial parks. So we are starting with that, but also those who are outside the industrial parks will have a formula on how you can also be helped to access the 5 cents per kilowatt per hour. Government continues to negotiate markets for you because we know a market of Uganda is not sufficient. That's the reason why recently we are working long and hard to be able to attract DRC, allow DRC to join the East African community. And we are glad that a population of around 200 million has now joined the East African community. That should be good news for you. And not only are we just accessing this market, but also we are facilitating you. We are now doing roads inside DRC Congo to be able to help you when you're exporting your things to DRC Congo. So this East African community has a population of 400 million as we speak. But in 20 years from now, we will be 886 million. Huge population. If the purchasing power of these people can increase through programs like Parish Development Model and others, you'll be able to have a population that really can support your sector. Then the exciting one is the African Free Trade Area. with a population of 1.2 billion, and we are adding another population of, and I think Africans, we are doing very well, another population 1.3 billion in 20 years to be 2.5 billion in 20 years. So whatever you are doing to manufacture, don't look at the population of Kampala or Uganda. Don't look at this small market. Look at the market of East Africa. Look at the market of Africa. 2.5 billion with an import bill of 547 billion annually. We want to, as a continent, to replace everything that we are importing on the continent by supporting manufacturing, by being manufactured here. We are importing 547 billion US dollars annually. So that should excite all of us manufacturers to say that we have that market. In the next 5 years, we'll be developing 22 industrial parks. And this financial year, as a PSST, we'll be letting you know, we are beginning with 5 industrial parks. Serviced industrial parks. Service industrial parks, meaning that if you want to invest, you should find a park that has electricity, that has internet, that has water and sanitation and waste management. All this should be in a park so that if you're an investor, whether local or international or foreign, should find a serviced park. You don't have to bother. And this land in the park, as you know, will be free for you. Will be free for you. So government is really working hard to support you. Through David, we want to continue supporting. There are people who have been complaining, coming to me, that you take long to approve. And I'm sure that he will be able to explain. But when you listen to his side, he said, when you come with all your requirements, he is able to approve. How long do you take to approve somebody if I have all my requirements? So you have heard from David, thank you, David, that if you have all the requirements, the approval process does not take days, it takes hours. Is that so, manufacturers? It takes hours. I thought we should clap for him because it takes hours. Thank you very much, David. But also would want you to work with other international standard bodies so that we see how we can get organized for the markets from Uganda to access the African Free Trade Area without being questioned all the time. We'd want, if a product is produced here, it should be recognized in Liberia, should be recognized in South Africa. So that mechanism should be put in place so that the standardization of these products is uniform across the continent.
Confirm that it was last month when we had the General Assembly of African Standards Organization, and we had the General Assembly of African Regional Standards Organization where UNBS is the member. This brings all 43 African countries who are going to regulate standards in the African Continental Free Trade Area. And I'm happy to note that UNBS was voted to be among the 12-member board. So we are going to drive the agenda of Uganda, the agenda of EAC, to make sure that our standards should drive access of Ugandan products to the continent.
So you can see what real government is doing to support you, Mr. Chairman. And as you do this, as the chairman has said, please remember our environment. And I think as an association, we need to have a policy in place. I'm glad that you are working on this to protect our environment. To protect our environment, because the protection of environment is the protection of humanity. You have seen what is happening in UK now. The heat to almost more than 40% degrees, and some people will lose their lives because of tampering with the climate. So as manufacturers, let's note we have heard what has happened in other areas, China and others. Let us now plan properly to ensure that the environment is protected, the climate is protected. Planting trees, waste management, and all these other policies that are needed to protect our environment. There's an important point of raw materials. We have had a policy of saying, for example, in the mineral sector, we are not going to allow anybody to export our minerals unprocessed. No exportation of raw materials unprocessed. And Kalibara and others have been telling me that there are issues of access to minerals. So can we have a discussion over this, rather of raw materials, a discussion over this? How can government be of help? But I want to assure you that there are opportunities in the mineral sector. As we speak now, we are seated on a $12.8 trillion of gold. We are looking for people who can mine and produce jewels, produce all other products. There are so many iron ore he's talking about that can take us for the next 50 years, seated in the region where I come from, Chigezi and Tororo. So even you, be our ambassadors, use your networks and contacts to be able to manufacture, to have a presence in the mineral sector. In the bill that we are proposing, which was sent back to Parliament, hopefully it will be resolved soon, we said we should have a mining company that will be working with you to see how best we can take advantage of this. Because it's a pity to sit on a $12.8 trillion which can take us, our budget is $12 billion, which can take us 1,000 years, and you sit on this resource, on the top, there is poverty. So we think that you, as well as manufacturers, you are the ones to help us resolve that issue. But ladies and gentlemen, we can say this, but if there is no peace and security, then this sector cannot stand. And you have our commitment as government that we shall continue to guarantee peace and security so that we can guarantee your investment. So feel settled in the sector that all these issues that we are talking about will be implemented by government. So let me go back to what Mr. Birungi wanted me to do. He wanted me to thank you for organizing this dialogue. So I really thank you. And he wanted me to make the second point of opening this dialogue officially. I hereby open it officially. Thank you very much.
Thank you very much, Honorable Minister. Listening to the Honorable Minister speaking, I realize why I'm not a minister. The ability to think on your feet and move quickly to pivot on these issues is commendable. But also, we appreciate you, Honorable Minister, because I think as manufacturers, each time we've reached out to you, be it at short notice, you've made time for us. And your commitment to the manufacturing sector is something we don't take for granted, and we appreciate you for it. Honorable Minister, we did know the doctor's orders that you have, and as you can see, we insisted that the chairs in this hall are yellow. We were very well aware of this because we did not want an ambulance here to take you away. So we are very well committed to that, Honorable Minister, and we thank you very much. Now, ladies and gentlemen, I did mention that the Honorable Minister will be leaving us because he does have another engagement he has to go to. But that's not to say the government is leaving. I know that the Minister of Trade is well represented here. We're expecting at any moment now the representative from the Minister of Finance to join us. But I would like you I would like to ask the Chairman and the Chairman Advisory Council to escort the Honorable Minister as he departs. Although you're still welcome to stay. This is not a goodbye. It's just to say we recognize that perhaps you will have to move on. Ladies and gentlemen, we are running slightly late. We're 20 minutes late. But I would be remiss if I did not recognize a few more people. With us is a team from KPMG, our auditors as the UMA, but they're not here as our auditors, they're here as our partners. I would like to thank Mr. Peter Chambade, who is a partner with KPMG, who is here to speak to us, to unpack the budget for us. He will be speaking to us a bit later in the program. I've already mentioned that the Minister of Trade is here, and they will be speaking to the issues of the common external tariff and what it means to you as manufacturers in your individual capacities. At this juncture, I know that some of you have not had a chance to benefit from the sumptuous breakfast on the extreme left and also outside. If you haven't picked a cup of tea, if you haven't picked a piece of something to eat, please do so, because it will then be a good thing for our sponsors to speak to us while they are seeing their money in use. And I thus, at this juncture, wish to welcome from NCBA Bank, the MD of Uganda, to come and speak to us. He's our sponsor. He has been very instrumental in enabling us to have these conversations today. You're most welcome, sir. Please join us. On standby will be the MD from Uganda, the Executive Director of Uganda Insurers Association. Welcome.
Thank you very much, moderator. Good morning, everyone. Good morning, manufacturers. The Honorable Minister, the Chair of the Uganda Manufacturers Association, the PSST, the PS of the Ministry of Trade, members of Uganda Manufacturers Association, ladies and gentlemen. It gives me great pleasure to sponsor this inaugural Uganda Manufacturers Post-Budget Breakfast Symposium with the theme, Positioning the Manufacturing Sector to Facilitate Implementation of the Objectives of the National Budget. As NCBA, Inspiring Greatness is one which is in our DNA, so it is no doubt that we are happy to be here. Before I go into my remarks this morning, I would just want to tell you a bit about NCBA. So NCBA is part of, NCBA Uganda is wholly owned by the NCBA Group, which is listed on the Nairobi Stock Exchange. As we speak, we are the third largest bank in Kenya. We have presence in 5 countries with over 100 branches and ATMs. Our branch network means that you can be part and parcel of a universal branch with a personal touch in the East African region. Our total asset base is about $4.4 billion, and we can, as a group, support up to $150 million. So we are certainly a partner that is entrenched within the region. Of course, as has been mentioned, we put our customers at the heart of what we do, and the manufacturing sector is one sector that we have at the heart of what we do every day. So the manufacturing sector, we believe, is a game changer in the economy, and we certainly are looking forward to more collaboration. As I mentioned, we are in 5 countries. Those 5 countries are Kenya, Tanzania, Uganda, Rwanda, and Ivory Coast. In Kenya, we have about 85 branches. We have 26.1 million customers and about 2,000 staff. But let's bring it home. We have 4 branches and 9.3 million customers. And you may say, how comes we have that number of customers? But I think if any of you has borrowed on the phone with one of our collaborators on the MTN, we are the ones who are behind that initiative. So we are really driving the economy indirectly. I would also want to, on the governance side, and I also want to recognize the presence of my directors. And at this juncture, I would want to ask kindly Mrs. Grace Kasasira to stand and acknowledge. That is Mrs. Grace Kasasira. She's one of our directors. Miss Jocelyn Kateba, you all know, is also one of our directors. Dr. Maggie Chigozi, who you all know, on the manufacturing side, is also one of our directors, and Mr. Grace Kavuma is our chair of the board. So, I just taking note of the remarks of the chair of the Uganda Manufacturers Association. One of the key areas that he was talking about is around COVID and how it impacted the economy. Our commitments are quite vast. One of them is around the COVID relief measures, where we certainly support our customers and support the people who have been affected by COVID. The other one is around relationship management, is one of our pillars as far as banking is concerned. We cannot succeed without being customer-centric. And then, of course, the minister, I think, asked turnaround time. Turnaround time is a key issue as far as manufacturers are concerned. So we commit on quick turnaround time. Being an importing country, you always have the foreign exchange risk. And as part of our solutions to the manufacturers is foreign exchange management and also financing solutions. So what we do is to enable our customers to bank, borrow, grow, and manage liquidity. So banking is as simple as that. Borrow, we help you bank We also help you grow, and we help you manage the liquidity. So we have quite a vast number of solutions. At NCBA, we pride ourselves to be the home of asset finance. And asset finance is a pillar that we have understood in the market, that we actually push as much as possible to our customers. So asset finance and being manufacturers indeed is a solution which I would really encourage the manufacturers to think about. It has got tax benefits. It has got a good repayment period. It has got also the flexibility of not always asking for additional security. As the bank, we are able to take the equipment as security that we are funding. We always hear as feedback, and as also Uganda Bankers Association, that one of the encumbrances and one of the constraints for expansion is lack of security. And as far as asset finance, this would actually solve most of your challenges. The minister mentioned that we import almost 500 billion in raw materials. And that means that we should be enabling you as manufacturers in getting the raw materials in through the trade finance solution. But most importantly, as far as the initiative of Bubu, we are more than happy to support the manufacturers in import substitution and also in manufacturing locally. So I would want to encourage you to talk to my colleagues who are in the room specifically around those solutions. As I end, I would want to congratulate the Uganda Manufacturers Association for this inaugural symposium. And as a bank, we would want to commit that we will continue supporting the Uganda Manufacturers Association in the endeavors to ensure that the manufacturing sector flourishes, and also to continue supporting this symposium on an annual basis. And also in other areas that we believe we can be able to work together. You will be listening later to my colleague from Nairobi, Raphael, who is our chief economist, to actually give us insights around the region, because we must recognize that we cannot work in isolation. We are now part of the East African region. So what happens, what impacts Uganda also impacts the neighbors. So the regional touch is important for any manufacturer in the region. So at this point, I would want to thank you once again for inviting us and allowing us to be partners in this symposium. And let us have a great day. Thank you very much.
Thank you very much, Mr. Muyobo, the MD of NCBA Bank. I think it bears repeating what he said, because the clapping was not adequate as far as I'm concerned. He said that NCBA Bank is going to be supporting this kind of event every year going forward. And we are very, very grateful for that support. No pressure, Uganda Insurers Association, but you're up next. I would like us to clap for you in the same vein. And so I wish to invite Mr. Jonan Chisache, the CEO of Uganda Insurers Association, our sponsors for today also, and our potential sponsors for next year and the years to come. Please come and speak to us.
As you invited me, you are facing the other side. I don't know why you expected me to come from the extreme end of the hall when okay. So the Honorable Minister in absentia, the Chairman Uma, the dignitary is present. As introduced, my name is Jonan Chisache, and I'm glad to be here on behalf of the Uganda Insurers Association. I would want to say good morning, and I would also want to say that I am privileged to be, we are, as the Uganda Insurers Association, privileged to be part of this symposium. So we congratulate Uma, and we can assure the leadership that yes, indeed, we will continue being part of this engagement and many others, because UMA to us as the insurance fraternity is such a strategic partner, Mr. Chairman. I sent through a small presentation, and Mr. Chairman, I'm hoping that you will allow me to present it to this audience. And in your remarks, I must note that you highlighted a few challenges that you have with us as the insurance industry. I am hoping that as I go through the presentation, I'll be able to touch some of those aspects and provide assurance and responses to the challenges that you've so ably highlighted here. But I was also challenged in your submission when you mentioned that it's important to benchmark on schools because we pay school fees willingly. That's a lesson I take from your submission, and we are challenged as the insurance fraternity to ensure that we go back and rethink our business to position ourselves as schools where you take your children and pay willingly. Because I think you're looking at the bright future or the result that then is said to come out of that investment. I don't know if my presentation is up. If it is not, I'll try to just read through. My presentation is entitled Promoting Uptake of Local Insurance. And Mr. Chairman, you alluded to the BUBU aspect. And marine cargo insurance is one of those aspects that promote by Uganda, build Uganda. So, as mentioned, I am from the Uganda Insurers Association. This organization was founded in 1965. And the sole purpose was just to promote the development and expansion of sound insurance and insurance activity and reinsurance activities within the country. Our membership includes insurance companies. We have micro insurance companies and also reinsurance companies. And this is the structure of the insurance industry. We're a bit different in terms of mandate from the regulator. And in your submission, Mr. Chairman, you alluded to IRA being present. But I come from the association, which is a membership body. Now, as we work, we try to encourage and promote close cooperation of our members. We do undertake research for better product development and also to ensure that the services we offer resonate with the needs of the public. Mr. Chairman, we also represent our membership to government and other bodies, but we also work with private bodies like UMA to ensure that we develop uptake of insurance services. I also feel that I must mention, because it's not every day that we get this kind of opportunity to be before so many manufacturers. I must also mention the sort of structuring of the insurance industry and what we have been able to do over the last maybe 4 years. Very, very briefly. I will tell you, Mr. Chairman, that over the last 4 years, our premiums have grown to over 4 trillion. And I stand here proud to say that indeed the insurance industry has grown. But the sole purpose of insurance, the sole purpose of setting up an insurance company is to pay claims. Of the 4 trillion that I'm talking about over the last 4 years, Mr. Chairman, 43% of that, and that's about 1.7 trillion shillings, has gone into settlement of claims. 1.7 trillion, 43%. Now, this does not include the other related expenses, because as we all know, a business will have many other expenses, including the management expenses, salaries, rent, we pay commission, we pay taxes, and also by nature of our industry, being long-term in nature, there are some liabilities that we have got to invest and put money aside for to ensure that when they mature, we are in position to honor that promise. So I am looking at this industry as a strategic partner, one that is committed to the development of the country through paying valid claims, but also providing employment to Ugandans. Now, Mr. Chairman, in your submission, you mentioned that it is now mandatory to insure all your imports with a local or a locally licensed insurance company. I want to just bring to your attention the fact that this journey started in next slide please. This journey started in 2015 with a report issued by the Intergovernmental Standing Committee on Shipping. And what that report highlighted was the fact that based on the imports between 2009 to 2015, the country lost $500 million through procuring insurance from foreign companies or insurance companies. 500 million. I think, if I'm not mistaken, from the budget this year, that is equivalent to the amount of money we are getting from grants. Over 5 years. This translated into $100 million per year. Lost. And I must emphasize that government on top of that, not only premiums were lost, but also corresponding taxes. Over 70 billion Uganda shillings was also lost in the same period due to externalization of marine cargo insurance. Now, this is in addition to the sort of funds that we pay or the investment we make or capital we inject into the imports. So on top of the amount of money, and I think the minister here informed us that we import just raw materials, $500 million. And if you add other imports, it goes to about doubles, to about maybe over $900 million. So in addition to that, we're losing money through externalizing insurance. And this was really as a result of the hands-off approach and also the different suppliers taking advantage of our local manufacturers and also local importers. Next slide, please. That slide is just simply put to remind us of the sort of challenges that we face as we invest into importation business, the sort of challenges at sea, the challenges on the roads, and also challenges on air, because there are different methods of conveyance in terms of how the importations leave the point of dispatch to you here in Uganda, who has ordered for the commodities or the merchandise. Next slide, please. Next slide, please. Just before that. But why local marine cargo insurance? How do we get the importers to pay willingly for local marine cargo insurance. Of course, in addition to the amount of money that we are losing, there are also other benefits of getting this product locally, or the service locally. Number one, there is ease and convenience of purchasing cover. We have now come up with a portal that is seated on our website, www.uia.co.ug. So it means that from the comfort of your home, from the comfort of your office, you should be able to then access marine cargo insurance. Now, it goes without saying that there's also ease in settlement of claims. And many of you manufacturers, you will attest to this, and importers. Many times you have imported your merchandise and you have been able to import it under the Incoterm CIF and access insurance from the point of origin of the goods. We have faced a number of challenges, including with our traders, Casita, where a claim arises and it's very difficult to get compensation from the foreign insurance companies. Now, with you purchasing your marine cargo insurance locally, you have the comfort of a regulator, and therefore compliance issues are taken care of. Of course, there's a complaints bureau, just in case there are challenges in terms of the relationship. This complaints bureau sits at the Insurance Regulatory Authority of Uganda, and again is willing to listen to any challenges that you might face. But also, in addition, many times when you imported your merchandise under the Incoterm cost and freight, and the URA is in the house, they can correct me if I'm wrong, these would be subjected to a surcharge of 1%, and that 1% was in line with the East African Customs Management Act, which then would put you to cost insurance and freight, because the customs valuation is based on the CIF value. So what we did as insurers, we just simply sat with Uganda Revenue Authority, and I must thank Uganda Revenue Authority for accepting to forego this surcharge, so that instead of behaving as if you have insurance and you are penalized with a surcharge of 1%, we get the 1% and provide you with insurance, an actual benefit which comes with the marine cargo insurance policy. So in many scenarios that we have been able to come up with, we have discovered that indeed it's cheaper for you to take insurance than to be subjected to 1% surcharge. So I want to comfort importers that there is no added cost as a result of localizing marine cargo insurance. But also, you are able to negotiate cover in terms of premium. Marine is a very wide insurance policy, so you're able to negotiate cover locally, but also, like Mr. Chairman mentioned, promote Uganda by buying Ugandan products and services. So I'm glad that we are riding off what you introduced as manufacturers to be able to offer a service to Ugandans. I want to end by doing two things. Number one, I would want to offer our hand in partnership to Uganda Manufacturers Association and your membership. We are willing, as the Uganda Insurers Association, to sit with you to craft specialized products. That is something we are passionate about. We would want to sit with you and ensure that the products we give you work for you. I have heard that you undertake research. We would want to conduct joint research to see how best we can improve coverage of products that we offer, but also how else we can be able to improve this offer of insurance. But also we would want to collaborate in terms of technology, but also to combine our capacity to offer you solutions, especially around the export guarantee insurance that you'd want to take up. I must reiterate, Mr. Chairman, that the biggest challenge we've had is that there is lack of data. Number one, when we were launching the marine cargo insurance, there was a complaint that the rates were high. And indeed, Mr. Chairman, you submitted as such. But we tried to carry out a study, and we asked a number of importers to give us rates on which we could benchmark. There was no information. What we did in 2019 was to discount the current rates we had at that time by 25%. So the rates you're enjoying as the manufacturers and any other consumer of marine cargo insurance are already discounted by 25%. And we pledge that with the introduction of marine cargo insurance, and I don't want to use the word mandatory, because I would want to look at the benefits that you get out of this product. The rates will further be discounted. If we can be able to reach the numbers that we've projected, Mr. Chairman, I want to guarantee that we shall discount these rates even further. The other thing I would want to ask, Mr. Chairman, and as I wrap up, and I know we are running out of time, that yes, indeed, you want us to offer guarantees, these financial guarantees, but we must build capacity of the insurance industry. By us supporting the local companies, by us supporting and taking up a local marine cargo insurance product, we are building capacity for the insurance industry so that we can position it to offer more risky products. So I call upon your members to support this initiative of taking on local marine cargo insurance. The other channels of distribution are still available. You can still get your local marine cargo insurance through your broker, your agent, through the bank, and NC Bank is here, and I've seen their bank assurance manager. You can still approach NC Bank and still get the same service. But as I end, you mentioned the issue of cash and carry, premium. There are two options, and the discussions will continue. And NC Bank, you can correct me if I'm wrong, but number one, we still have an installment payment clause. So you can still negotiate with your insurer to pay premiums in installments within a controlled number of days. And the regulations are up to 60 days. That is a window depending on your relationship with the insurer. But also secondly, I know that NCBA Bank has insurance premium financing. I may be wrong. Am I wrong, NC Bank? NCBA. And the rates are negotiable. Very, very low rates. So the manufacturer also has an option of approaching NCBA Bank to negotiate premium payment through IPF. Mr. Chairman, as I end, I want to commit that as UIA, as the insurance fraternity, we will continue listening. We must listen to you, because without you, the manufacturers, without you, our customers, the insurance industry can't stand. So I commit that we will listen, we will continue engaging to ensure that we come up with a win-win. Because you must win, the insurers must also win, for God and my country.
Thank you very much. I think it's important that we appreciate Mr. John and Chisache for that presentation. And we are particularly keen on the conversation around joint development of policies that can aid the manufacturing sector and other sectors. That is critical, and we will be taking you up on that offer. At this juncture, I wish to also recognize that the Minister of Finance is in the room. We wish to welcome the Director of Economic Affairs at the Ministry, Mr. Moses Kagwa. You're most welcome. Thank you for joining us. And we know that you come with a big message to deliver. We will be giving you an opportunity. I've had a chance to discuss with Director Kagwa, and he has indicated that while he would like to give remarks, he doesn't think he wants to be part of the conversation. And we've agreed that he will come later as part of the panel so that he can interact with you. A very big welcome also to the Commissioner General of the Uganda Revenue Authority. You're very, very, very much welcome, sir. And it's very good to have you. We will be also listening to him a bit later in the program. At this juncture, in order to catch up with time, we've switched the program up a little bit. We're going into a session that is quite intense and quite informative. And in the next session, we're going to have two presenters present to us. First up will be Mr. Peter Chambade, who will be speaking to us, providing an overview of the budgetary implications for the manufacturing sector. The budget has been read. You've heard what's in it. The different legal regimes that have come into effect are in effect. What does that mean for you at your individual company level, and what do you need to prepare in order to be able to be part, to take advantage of the budget? That's one of the discussions. Following closely after that will be Commissioner Emmanuel Mutahunga, Commissioner for External Trade at the Ministry of Trade, Industry and Cooperatives, and he will delve deeper into a component of what Peter will be speaking on, which is the Common External Tariff. Effective 1st July, there was a new Common External Tariff structure that came into force. A lot of changes, among them the fact that we now move to a 4-band structure. You will understand what this means as we get into the presentations. Before we move to those, however, it's also important that I recognize a few more people, and I'll be doing this throughout the session, so don't feel left out. We do have with us our partners from USAID. We are part of a program called the Domestic Revenue Mobilization Strategy Program under the USAID. We're doing that along with URA and a couple of other partners. So we want to welcome Mr. Muhindo James. I think you're here with us. He probably has stepped out. We also, as you know, traditionally host the Uganda International Trade Fair. This is going to take place from the 3rd to the 10th of October this year at the Uma Showgrounds. I know that many of you have already booked your stalls. For those who haven't, we still have very few left. You're welcome to book. But one of our platinum sponsors is Tembo Steel Limited. They've given us sponsorship of 150 million, and Mr. Sanjay Awasti, the chairman of Tembo Steels. If you could please stand up for recognition. Mr. Sanjay? He's stepped out? Okay. But yes, we really appreciate your presence and would like to recognize you. Please, Peter, I wish to invite you to speak to us about the budget. What does it mean for us, and what can we do to make full utilization of it?
Thank you very much, Daniel. Good morning, everyone. The Honorable Minister, represented by the Director, Economic Affairs, the Chairman of the Uganda Manufacturers Association, the Commissioner General of the URA, the several dignitaries represented here and invited by the association, members of the association. We are happy to be here to partner with the association and to have a discussion about the budgetary implications, focusing on the tax implications and what it means to the manufacturer, looking at the pronouncements of the 2022-2023 budget. And as I await for my slides, when the chairman was here, he spoke on a number of aspects. And I noted that a number of those aspects were also put in the budget by the minister. And I think now as the association, it is important that some of those promises and areas of focus by the government, we need to monitor them and hold the government to account. Because the minister in his budget speech indicated that there's going to be focus on promoting agro-industrialization, standards, and market entry, which also the Honorable Minister Bahati has also indicated. And in the speech, they indicated that government is putting aside 1.4 trillion shillings to promote agro-industrialization. So the question is, if that money is being put aside, how are we going to access it? I think the minister has indicated that some of this has been put through the UDB, about 481 billion, and the private sector can approach the UDB to get some of this financing for purposes of the activities that they are planning in industrialization. And also, the minister indicated that there is some equity in case you are short of financing. UDC can also have some equity in terms of partnership with government into your business. Then the other specific area that was highlighted is the government put up fully serviced industrial parks, which the minister has spoken about. They are planning to do 22 of them in about 5 years, and this year, about 5 of them. Serviced so that if you are there, then doing the manufacturing business would be easier. So that is something to also look out for. Then they also promised to promote investment in strategic industries such as the manufacture of pharmaceuticals, industrial sugar, starch, herbal extracts, and cotton-based medical sundries. All those are promises by the government. And in my view, since resources have been put, since resources have been put aside for those, then it's our duty to ensure that we partake of those. Then there was also a promise of establishing a system for issuance and management of internationally recognized products. That is standardization. I'm happy the UNBS head is here. That is recognized product barcodes, branding, packaging, and labeling of Uganda's products for visibility. Because if we are to be competitive, then we must have those standards. And the chairman also talked about standards and ensuring that we have specific standards put in place. And UNBS, I believe, is here, and probably later on they could speak more about this. Then enhancing implementation of export development strategy, including carrying out negotiations for access and entry to regional and international markets. That is an area, of course, which is key, that when we produce whatever goods are being produced within the country, then there is market where this can go. So, and the minister has also spoken about this. Then also, the chairman was concerned about some laws which are not in place. And the minister in his speech during the budget said that they are planning to finalize the enactment of pending legal instruments. For example, the competition bill, the consumer protection bill, the anti-counterfeits and quality products laws. So all those are within the minister's speech. So I think it's our duty then to, as association, to work and collaborate with government and ensure that these things that have been promised actually are acted on. So now going into my presentation, I was asked to focus on giving an overview of the budgetary tax implications. Next slide. And as we are all aware, one of the areas of focus within this year's budget is industrialization. So which means the sector of manufacturing is pivotal to the budget this year, and of course, also, if you look at the NDP3, it is one area that is being focused on. So, we need to check some of the changes that have happened within the provisions from a tax angle and see what implications they may have. And also in the speech of chairman, there are a lot of tax concerns, and it's good to see that the Commissioner General is here, and I believe a number of aspects when it comes to the discussion that the members have, they will be addressed by the Commissioner General. Next slide. So, in my presentation, I'm going to look at the different provisions in the different taxes, and then see how do they impact the Manufacturers Association and members, so that we can plan accordingly and ensure that we manage our businesses to continue thriving. Next slide. That is me. I'm a partner at KPMG. I've been working in this tax area for over 21 years. And I came with my colleague, Shifra, who is a specialist in customs laws and regulations. So, next slide. Looking at the budget for 2022-23, we are all aware that we are looking at a 48.1 trillion budget, which is up from the 44.7 which we had last year. So, given that the country is growing, there is also progression in the requirements for growth of the economy. And out of the 48.1 trillion, 30.8 would be gotten domestically or derived through domestic resources, of which this year 23.8 trillion is expected to be from tax revenues. And that is up from 20.8 trillion last year. So there is an increment in tax revenue by 3 trillion that is expected to be raised from members in this room and others. And this year, as also the minister said that time and the minister said this morning, the focus was not to increase taxes. There are no new increased tax rates that were brought into the picture. However, the government focus this year is going to be improving efficiency of tax collection and enhancing tax compliance laws. What does that mean to us? That the tax authority is going to ensure that the laws which are in place for purposes of collection of tax are implemented as they should. What does that mean to us? is that as members of the manufacturing sector, we need to look into our tax affairs and we ensure that we are compliant, because the compliance drive is going to be higher. There are no new rates generally that have been introduced. However, there has been an increment in the tax expected to be collected by 3 trillion. So, the minister also indicated that there is going to be the increased building of the capacity of the URA to enhance compliance. So probably more recruitment and also use of technology in tax administration. I'll give you an example when it comes to technology. When I finished university, I worked with URA shortly for a few years in 1994. That time, everything was manual. Sometimes you would collect returns and you have a full room full of returns. So due to the fact that automation was low, analysis of data was very difficult. And as such, from a compliance perspective, many taxpayers would say, even if I don't do ABCD, chances of the tax authorities knowing were very low. Where we are now with the technology that is available, when you look at already we have e-tax, we have IFRIS, we have a SCUDA, we have Dictator Tax Stamps, and many other technology solutions that are there. The level of visibility of our activities is very high. And as such, that calls for increasing our compliance levels to avoid the pain of penalties. Because when we are doing business, it is important for us to note that the taxman, represented here by the Commissioner General, he has a big share of our business. In Uganda, minimum 30%. So as the owner or shareholder, whether you like it or not, the taxman has a share of your business by law. And a 30% shareholder is a huge percentage. And because it's given by law, he does not wait for dividends to be declared. Once you make a profit, he takes his share of 30%, whether you have declared profits or not. Whether you want to reinvest by law, as long as there's a profit, there's 30%. And that 30% can be higher. As we have seen in this year's budget, there are a number of penalties and interests that have been introduced. The chairman talked about them, which probably the policymakers and the regulators need to look into, because some of them seem to be very, very punitive. However, what does it mean to us? Because now the law is there. If we do not comply, the taxman may not just take 30%, may actually take 100% or more because of the penalties and interest that may accrue. So it is important that we take note of that, we get to understand the different provisions and proactively manage our tax affairs. What are some of the changes that came through that I want to highlight? Next slide. Next. From an income tax perspective, for a number of entities, we may be part of a group, whereby the group may be having maybe non-resident shareholders. In order to take advantage of the double tax treaties which Uganda has, we have 8 of them currently. And those double tax treaties, other than the one of UK, they generally have preferential rates. If you want to take advantage of those, then there's a principle of beneficial ownership that you need to know. If, for example, I have a parent in Mauritius and that entity which is holding shares in my entity, when I'm paying it, I want to use preferential rates. Instead of 15% withholding tax when I'm paying management fees, I have to use, let's say, 10%. Then you need to check, is the person receiving that a beneficial owner? And that definition has been made clearer, that that beneficial owner must be a natural person. Because many times we have interposed companies. I have a company A in, let's say, in the UK or in the US owning a company X in Mauritius, which company X, which has a double tax treaty with us, owns a company in Uganda. However, when you look at the owners behind company X in Mauritius, the individuals, probably it is another company owning that, and the ultimate individuals are in the US. In that case, you will not be in position to take advantage of the preferential rates within the DTA. So it's important to check before you apply whatever rate. If you are going to take advantage of a DTA, check, is the natural person benefiting from the payment a resident of that country where we have a DTA? If not, you may not use it. Because if you use it, then you may end up being penalized. Then, positive, I know we import quite a lot, and we use transporters, maybe from Kenya, to bring in our goods. And originally there was a problem whereby the tax authority, some of the officers in the tax authorities were applying tax and saying maybe 15% should be applied as withholding tax on the services of the non-resident transporters. That was clarified in the law this time, that to the extent that goods are being embarked from outside Uganda, then the income those transporters, non-resident transporters derive is not taxable here. And as such, for example, the withholding tax rates, withholding tax which some of the officers wanted to apply, then would not be applicable. So probably that would make transportation a little bit cheaper, because in many instances, when you load on, then these guys were trying to make it net, which would make transportation of the goods more costly. The next slide, we are looking at rental tax changes. A number of the entities here may be renting. A number of them may also have rental properties. There was a change in the law. And probably what the chairman was talking about many changes which come every year. This is one of them, which makes the taxation policy a little bit unstable, as the chairman was saying. So maybe from a policy perspective, in the rental space, we have had several changes, almost in the past 3 or so years. Every year you have something coming in, which makes that space a little bit unstable for the investor. So from a policy perspective, I think that stability needs to be obtained. Because if I'm investing, let's say, in this, and then I'm not sure what will happen next year, it makes it a little bit difficult to plan my business. So from a rental perspective, yes, there was a change last year. There's another change this year. And the change is to the effect that if you're a company, the expenses you can claim from your rental income is up to a maximum of 50% of your income. And that is subject to verification by the tax authorities. So if you are earning $1 billion from rental income, the maximum expense you can claim before getting taxed is 500 million. Originally, before this change, to the extent that you could support your expenses, maybe to 100%, then you may have zero tax to pay in that year. But this time round, according to the change, effectively, since 50% of your income will be taxed at 30%, the effective rate is at a minimum of 15% of your total income. So if you have rental income, 15% of it as a minimum will be taxed, regardless of whatever expenses you have. However, it should be noted, to the extent that you cannot also support up to the 50% of your expenses, then you cannot just come and claim the 50% of those expenses, which means the effective tax rate then would be higher than 15%. That is for companies. For individuals, the change is to the extent now that when I have income, then what I'm allowed as an expense is a threshold, or what we call the threshold, which is 2.82 million. That means the expenses I can claim, regardless of whatever expense I've incurred, what I can claim to reduce my rental income is 2.82 million. And then on the balance, I'll be taxed at 12%. When you do the computations and look at last year's provision, this year's provision, there's been a little increment in terms of tax on rental. So the impact of that, if the landlords wants to pass on that to you, probably they may raise a little bit of the rent. That is a possibility. So it is something that you need to note as you plan for your business. From a VAT perspective, next slide. Positive development. Supplies to government. VAT will be accounted for on cash basis. Very positive development, because a number of businesses were suffering with cash flows because probably they would need to borrow to finance VAT, given that VAT law in Uganda is to the extent that once I raise an invoice or supply goods, then by the 15th of the following month, I have to account for VAT. And given that government sometimes takes a bit of time to pay, then a number of businesses were having trouble with cash flows. So now if you supply government, that is no longer going to be a problem. However, I think there is a process that you need to go through to ensure that when you're making a supply to government, that is well recognized by the tax authorities, so that when you are making your return, that is taken into account. Then for people who may be planning or manufacturing oxygen cylinders or oxygen for medical use, then assistive devices for persons with disability, VAT was exempted on those, which means the cost to the final consumer should then expected to be lower, and probably that increases the volumes that manufacturers may be able to sell. Next slide. Then people who might be manufacturing menstrual cups or planning to do that, inputs for supply of menstrual cups or actual supply of menstrual cups, that has been zero rated, which means that any input VAT that you incur can be claimed. So that is also very, very positive to encourage supply and manufacturing of menstrual cups within the country. Then also, if you are making supplies to hospital development, where the person making that development is investing more than 5 million or more US dollars, then all the supplies to that would be exempted from VAT. So that fully will make it easier for investors to come and invest in putting up health facilities, which will give market to our products. From a customs perspective, next slide, I'm just going to highlight the fact that every 5 years we have new CET rules. And the one which we were working with until June 2021 was from 2017, and now the new one until 30th June 2022 was from 2017, and new laws were now put in place with a few changes, and which take effect from 1st July 2022. Good enough, we have someone from Ministry of Trade to take us through this in detail. What is key to note is that there was an introduction of the fourth band of 35%, which is also positive for purposes of protection of the local manufacturing industry, such that for goods which can easily be manufactured within Uganda, then there is a higher rate which could discourage importation of those. And I think the details of that, I will not go into them. That will be highlighted by the presenter from the Ministry of Trade. Next slide. There are other provisions. As we said, one of the aspects of the budget was to promote industrialization. And if you are going to promote industrialization, then access to capital needs also to be made easier. And one of the changes is the Stamp Duty Act, whereby there was no more stamp duty expected to be payable on agreements relating to deposit of title deeds and pawn pledges. Originally, it was 1%, which was making it quite costly when people would be going to borrow. So that stamp duty was removed. So hopefully it will make access to capital easier when some of these costs are removed. Then removal of stamp duty on agriculture insurance policy, and also no more stamp duty on security bond and mortgage deeds. All these would help to let access to insurance easier in terms of agriculture, and also for security bonds and mortgage deeds, access to capital would be made easier. Then, next slide. I noted that the focus this year is on increasing compliance. And for purposes of increasing compliance, a number of provisions we are put in the Tax Procedure Code. And those are some of the penalties the chairman was talking about in his speech. For example, failure to activate tax stamps on locally manufactured or imported goods. This would lead to a penalty of 30 million or imprisonment of 10 years, or if you are convicted, and depending on the judge, it could be both. You could pay that 30 million, be imprisoned for 10 years, or the judge may decide you just pay the 30 million. So, Dictator tax stamps, I believe we are all aware, and we know the goods where we are supposed to apply them. So failure to activate those stamps on locally manufactured or imported goods can lead to those penalties. So we need to put in place mechanisms for compliance. Then, there is another penalty: making false or misleading statements. Originally, the penalty was 4 million. So making false or misleading statements to the URA, originally the penalty was 4 million. Effective 1st July, that was increased to 110 million. It is important for us to know this because you do not want to sweat to earn money or revenues, and it is taken away by penalties and interest. And those penalties and interest, I've seen businesses that have gone under because of penalties and interest. So with all the input that we have, your business going under or being very negatively impacted by penalties and interest, I think as a start on our side, how do we ensure that we are as compliant as possible as we lobby the policymakers and the regulators to see how to reduce on some of these penalties. But as of now, it is low. And if it is low, then the first thing is on our side to see how can we comply. Then, requirement for a person to comply with the requirements of electronic invoicing and receipting and the Dictator tax stamps. If you do not comply, the law now says the tax authority can close your business for 15 days as they give you time to comply. So that is also within the law. Then there are several other offenses that have been introduced: defacing of tax stamps, forgery of electronic receipts and invoices, and others. And also those have penalties of 30 million or 10 years imprisonment or both if convicted. So with those aspects that I have picked from the budget, what I can say is, for the manufacturers in the room, it is important that all the way from the board level, we ensure that we have specific strategies that are geared towards ensuring tax compliance. And this requires ensuring that your systems for record keeping are clear. The knowledge that you have within the business about tax compliance is clear, because a number of times in my business as a tax consultant, you find entities having tax issues because they did not know, not because they really wanted to avoid or evade, but they did not know. So, all the way from the board, let this be a critical area of focus to ensure that we have people focusing on having the relevant knowledge, on having the relevant strategies, on having the relevant systems that will help us to comply. Otherwise, we should not open and use our ad-earned revenues into penalties and interest. So thank you very much. As KPMG, we are always available to assist when you need any assistance. Thank you, so that you concentrate on your businesses and other people can help you to think through the taxes. And I always say it's also good to collaborate with the tax authorities. Don't fear them. If you have an issue, go there. Have a discussion. Then it helps. Because originally people used to run away from the tax people. And that does not help. It's important that the more knowledge you have about taxes, the easier you are able to manage them. Thank you. Thank you very much.
Thank you, Mr. Chambade. You left the room a lot quieter than you found it. I think by virtue of the final slide speaking to penalties, it seemed to have sobered us all up to understand what is at stake. And that is the point of these engagements, that we get an understanding of what is at stake. But in our interactions with the Commissioner General, I've reminded him that, like him, I'm a practicing Christian. And that as Christians, we are firm believers in Romans 3:28, which says we've all sinned and fallen short of the Lord's glory. And that we don't get bashed when we sin, we get aligned so that we get better along the way. And I think that's a conversation that we shall continue to have. Because certainly, I think our opinion as the UMA is that regulatory agencies should not be punitive agencies, but rather support agencies for business growth. Because when we grow, you grow, and the economy grows, and all of us are then better off for it. At this juncture, allow me to invite the Commission External Trade, Mr. Emmanuel Mutahunga. Mr. Emmanuel Mutahunga has been at the forefront of negotiating on our behalf the common external tariff at the East African community level. And Peter spoke about it in his presentation to say that, wait, there's a change. You're moving from a 3-band structure to a 4-band structure. There are different changes in how you access your raw materials, but many of us may not be very well aware of what the content is in there. So Mr. Mutahunga will help us unpack the content of that discussion.
Good morning, colleagues and friends, the owners of the money in the economy. My presentation has no penalties. But I'm sure in the course of this discussion today, we'll be able to appreciate why the penalties are there and how we can live with them. Because I think all of us in this room, whether in the public sector or private sector, we need each other to move up. And that's why this dialogue is very important. Daniel has said that we have been at the forefront of negotiating on your behalf the common external tariff. That's very correct. One thing he didn't add is that he has also been part of that process, the Manufacturers Association. And I want to thank UMA for doing that, because in all the technical discussions that we have had as a government, on the government side, of course, having several ministries, departments, and agencies, including the Ministry of Finance, URA, and other ministries, and both ministries of finance and the URA are represented here at a very high level. I want to appreciate that. The private sector, we have all been part of that process. So I'll quickly run through what I've prepared to share with you, trying as much as possible to unpackage what is contained in the Common External Tariff of 2022 as implementation started on the 1st of July this year. So today is the 19th day of implementation of that tariff regime. As well, background, those of us who are familiar with the treaty establishing the East African Community, you'll note that Article 75 deals specifically with the establishment of a customs union. And in that article under Clause 1, it is provided that partner states agree to establish a customs union, the details of which were to be elaborated in a protocol. And that protocol is the Customs Union Protocol. And some of the things that were provided in the treaty that would be covered in the protocol include establishment of a common external tariff. And I would want to draw your attention, those of you who are able to look at the screens, to the other aspects that the protocol contains. Aspects such as application of the principle of asymmetry. Those of you who are already in business, you know that there was that transition period between 2005 to 2010, between where Kenya was completely at zero and for us were reducing or coming down. Then the elimination of internal tariffs as well as other charges of equivalent effect, elimination of non-tariff barriers. I know this is a very big speaking point or talking point for all of us in this room, and probably we can be able to see how we move in there. Aspects related with rules of origin, and all the others, you can move to the next slide, as you see on that slide. Those are also very important for us as people involved in doing business in the East African community. So as we look at the common external tariff, we also would need to familiarize ourselves with those other aspects. At that point, indeed, it was envisaged that establishment of the customs union would be gradual, and therefore that transitional period that I earlier on alluded to. Now, when we move down to what a common external tariff would be, both the treaty and the protocol define it as an identical rate of tariff imposed on goods imported from foreign countries. Now, foreign countries in this case does not mean Kenya. It means countries other than the partner states of the East African community. Then in Article 2 of the protocol establishes the customs union itself, and some of the key provisions that I do highlight for that article is that customs duties and other charges of equivalent effect imposed on imports shall be eliminated, except as provided for in that protocol. Then non-tariff barriers to trade among the partner states shall be removed. Then the third one is a common external tariff in respect of all goods imported into the partner states from foreign countries shall be established and maintained. And that is the main subject of our discussion today. But of course, as you'll note, generally, world over, when tariffs go down, non-tariff barriers come up. And that is what we're experiencing in the East African community. And I would want to implore you that as we continue engaging, we also keep looking at how best can we as private sector players play our part in ensuring that these non-tariff barriers are not introduced by our governments. Because the beauty with governments in the East African community, we listen so much to our private sector. That's why when you look in this room, you basically have the most senior and relevant people you can have. On that table, you have the Director Economic Affairs, the Commissioner General URA. You have the Director PPD, you have the Executive Director UNBS, and ourselves. So you actually summoned us. And I can assure you, none of us will leave until you say, we have closed, you can leave. That's how important we regard you. So if you agitate that, please introduce this NTB, you'll probably find it there. Then if it hurts you and you say, now it has hurt me, please remove it, we'll act. Therefore, we need to be engaging in such a manner that we are looking at the bigger picture and we are not, as private sector, pushing for internal policies that might restrict our own access to the East African market. Because it's a big market, probably actually about $1.6 billion of exports every year before DRC comes on board. And we need to grow, to see how to grow it. Now, if I move into the specific article on Article 12, and I'm still giving background for us to know where we're coming from before I address myself to the CET of 2022. Article 12 deals particularly with the common external tariff. And its provision is that the partner states hereby establish a 3-band common external tariff with the minimum rate of 0%, middle rate of 10%, and then a maximum rate of 25%. Those are the 3 bands that the tariff structure, the common external tariff, had at that point. The article also provides that the partner states undertake to review the maximum rate of the common external tariff after a period of 5 years from the coming into force of the customs union. So even at the time of the start of implementation of the customs union, it was envisaged that the highest band would be reviewed. And that's what this review actually focused on much of the time. The same article also gives some direction to the Council of Ministers on what could be done in the process of review. And it is so much arrived to the fact that there could be some negative impact in implementation of the common external tariff. So that is also addressed in there. Plus, of course, the fact that they would be working based on the HS coding system. And I'm sure all of us here are familiar with that. So the common external tariff is itself also an annex to the Customs Union Protocol. We started implementation in 2005 and achieved convergence in 2010 with those tariff, that band structure that I talked about. If we could move to the next slide, slide number 8. Now, besides the 3 bands, we also had what we called sensitive items. Those are the products whose tariffs were set at rates higher than 25%. And for very noble reasons, to protect domestic industry. And when we talk of domestic industry, we are looking at domestic industry within the East African community, not just Uganda. We, of course, are aware that a number of players within this room benefited from that initiative in terms of the policy protection. And we are glad when we look at the achievements that have been made from that perspective. Of course, in the course of implementation, we have had significant application or states of application of duty. Now, those states of application of duty have actually led some people to coin words like the unmaking of a customs union, but which we really don't think that they are, because policy is not set in a very rigid way. Policy is set in a manner that it is flexible and addresses issues as and when they arise. So that the states of applications have been in place, and I don't think that they are about to completely go away, because we keep adjusting according to what is prevailing at the circumstances. The review process started in 2016 of the common external tariff and was finalized in May 2022. We followed the participatory approach like I indicated earlier, and UMA was actually actively engaged, and I want to thank you very much, the Secretariat, for spearheading this process of engagement on behalf of the Manufacturers Association. I was hoping that somebody would clap for the Secretariat. Now, the revised common external tariff is contained in legal notice. We can move to the next slide. Legal notice codenamed EAC. No, you have moved too fast. EAC /117/2022 has been gazetted already and took effect on the 1st of July 2022. Now, I would want you to look at the last bullet on that slide, because that's where some new aspect comes in. the community, it is provided in the gazette, in the city itself, that the community shall have a 4-band common external tariff. So we have moved from the 3-band structure to 4-band, with a minimum rate of 0%, rates of 10%, 25%, and a maximum rate of 35% in respect of all products imported into a community. And I need to point out that 0% is essentially for raw materials and capital goods, 10% for intermediate products, then 25% for finished products. Now the 35% that has come in is for what I would call finished products of greater interest. And in my presentation, I'll be highlighting some of those. The list that I'll show is not exhaustive. I encourage you to access the common external tariff itself, which is available online, to familiarize yourself in case the products that you're interested in are not among those that I highlight. Then, of course, we have the sensitive items, and I need to clarify that the sensitive items in this context are those whose rate is higher than 35%. For these ones, I have clearly brought them out. We'll be able to see. We can move to the next slide. Now, that table that we have on that slide gives a summary of the distribution of tariff lines. And here I'm talking at HS8. We have a total of 5,955 tariff lines. Now, when we move into the distribution amongst bands, we have 2,245 at 0%, then 1,174 at 10%, 1,965 at 2%. We have those which have compound duties at 25%, or 200 metric tons, $200 per metric ton, whichever is higher, 22 tariff lines. Then 35%, there are 496 tariff lines. Then the sensitive items, again for emphasis, those whose rates are higher than 35%, 50 tariff lines. And then 35%, or US dollars, 4 cents per kilogram, whichever is higher, 3 of them. Mr. Kago, I think we have been having discussions with some constituents on this, because there have been some concerns on this. But like I said earlier, you have a listening government. We always talk and find solutions. And that's the beauty of what we have now. So that's how the tariffs are distributed in the 2022 Common External Tariff of the EAC. Now, what are the implications for the manufacturing sector? I've really done a summary of these. We can break them down as by sector as we go along in terms of the discussion, but essentially they all come back to this. Number one, raw materials and capital goods are availed at 0% import duty, which implies lower costs of production for the manufacturing sector. And I think that's a plus. We talked about raw materials area, availability, but of course there is also an element of cost. So in order to ensure that the cost is also lower, we maintained that at 0%. Intermediate inputs at a reduced rate of 10%. Again, this means reduced cost for the manufacturing sector. Then we have rates of either 25 or higher than 25% for finished products and the other sensitive items that I talked about, which implies enhanced levels of protection for East African community manufacturers. So enhanced levels of protection for you, the manufacturers. Now, the implication of this is that we need to invest in order to import substitute. And I like the words of the chairman to the minister. You said, we have the money to invest. So let's invest to import substitute. Because when you look at the import figures for this country, for the East African community, and you break them down to some of the products that we're importing, you actually wonder why we are not making them here. So I think we need to have these discussions and say, look, now as government and the private sector, since we have this policy in place, it is supporting us maybe 70% or 100%. Let's do this in order to fully import substitute so that we create these jobs here. Now the next slides basically highlight some of the products whose common external tariff rate is at 35%. We have products in chapter 2. These ones are not really read all of them because I believe we need to catch up with time, but just highlight. So we can move to the next. Most of the products of chapter 2 of the HS coding system are in that. You can see them. We have products of chapter 4, a number of them at 35%. Chapter 5, human hair and worked, whether or not and the like, are 35%. I saw some people complaining that we are affecting consumer welfare. I think it is in one of the regional papers this week. So maybe they were looking at some of these aspects. 0501 is there, 0507 is there, 0508. Then chapter 6, 0603, the cut flowers and so on. We can be moving along, whoever is moving the slides. Then chapter 7, 0701, potatoes, whether fresh or chilled, 35%. 0703, 0706, 0707. We are also having those at 35% because really we don't need to be getting these products coming to the region at very low rates because this would have very negative impact on our agriculture sector. You move to products of chapter 8, a number of them which are there. If you move to slide 18, you'll be able to show them there. Then our famous coffee and tea, 09, 02, 0901 as well. But also other products in chapter 9, such as paper, already at 35%. And the intention here is really to protect our agriculture sector. And I believe that we all agree that this was the right thing to do. Then products of chapter 15, 1507, 1508, 1509, 1517, all in there. Products of chapter 16, 1601, 1602 also well protected. 1703 as well, and 1704 at 35%. And this is a very interesting chapter because I think immediately we adopted this, the first messages we got seeking for clarity were from the Sugar Manufacturers Association, and I hope we have them in the room so that we're able to have that clarity that you thought then and which we gave you. Products of chapter 24, or at 35%. That's tobacco and manufactured products from tobacco. 25, 23, cement and clinkers as well. Then 3208, I'm sure in this room we have people who are from that sector. So you're also well protected, at least from the 35% we have. Chapter 44, then 48, 63. And then again, another very interesting one, the products of chapter 72. These, like I said earlier, these are just highlights. It's not exhaustive, but I'm giving highlights in those products. Now, when we move to the sensitive items, we can move to slide 26. Yeah, in there. Now, we can clearly see what they are. We have products again of chapter 4, the dairy industry. And these products, really, we make them. I think we have built a lot of competitiveness, but we still need to do, to continue doing that so that we are not having milk from New Zealand or Netherlands and so on, or products of the dairy industry. We look at products of chapter 10, as you can see on the next slide. These are also sensitive items. For the sensitive items, the rates are above 35. We have 50%, you have 60%, and in some instances, 100%, together with the specific duty. Then we have products of chapter 17, to be specific, 1701. Then in the textile sector, 1508, 09, 10, 11, 12, 13, 14, all these are sensitive items to the East African community, implying that their rates are much higher than the 35%. Then also products of Chapter 62, to be specific, 6211 and 6302. Now, these are the products that we have within the CET as sensitive. I'll now move to my conclusion, but before I conclude, just to re-emphasize that the implementation of this started on the 1st of July of this year. Now, as I conclude, I want to make the following observations. Number one, that the common external tariff is just one of the trade policy instruments to drive industrialization. So us as industrialists, us as the private sector, as we move to see how we develop our sector, we need to look at the trade policy aspects of the CET, but also other instruments. If you recall the slide that I talked about, the other elements that the Customs Union protocols to cover, those are also very important. The rules of origin, the regulation on dumping or subsidies and countervailing duties, very important for us. So it is important that we always look at it from a holistic perspective. Then full implementation of the Customs Union protocol is beneficial to all the partner states. And therefore, it is important that we continue engaging positively with each other as partner states. Of course, usually on the prompting of the private sector, in order to fully harness these benefits. Then the other key element, we have been talking about the African Continental Free Trade Area. I'd want to state that normally in our engagements as East African community for trade negotiations with third parties, the common external tariff forms the basis of our negotiations there. Then lastly, continuous and sustained public sector and private sector engagement is essential for harnessing the opportunities that the common external tariff of 2022 provides. So we have to look at it from the perspective of the external bit, but also the other internal aspects that we need to address ourselves to. I thank you very much.
Thank you, Commissioner. The Commissioner had the unthinkable task of distilling 5 years of work into a short presentation, and I think he has done an able job of it. Of course, we by no means think that you've grasped the extent of the CET through the short presentation, and we shall be organizing a substantive engagement on the CET where you can actually engage on the specific codes relevant to your industry and get a chance to interrogate them a bit further. In the interest of time, we've made a few changes to the program. We do recognize that we are holding about 5 government agencies here where business has to continue. Some of your PVOC requests, your exemption requests are now pending because the people who are supposed to approve them are here. So we will move into the session. We'll switch up a bit of the program to ensure that we talk to government, we get to hear from government shortly. Before we bring them on board though, we have a gentleman online who has been with us since 4 a.m. his time. He's based in Ghana at the African Continental Free Trade Area Secretariat, because we thought we can't gather you here today and speak about all these issues without having a conversation on the African Continental Free Trade Area. So online is Mr. Silvo Jacol, who is at the African Continental Free Trade Area Secretariat, to just give us a quick brief on what we can expect out of the African Continental Free Trade Area. And following that, we shall move into the session with the agencies. Mr. Jacol, can you hear us? You're muted, I believe. Yes, Mr. Jacol, can you hear us?
Yes, Mr. Virungi, I can hear you. I have been listening in since the opening of the meeting at 8 o'clock, I think Uganda time, from the time that the chairman was making his remarks. So first of all, I would like to thank you very much for. Okay, so you want me to start the video? Just 1 minute. All right. So the colleagues from Ministry of Finance, Ministry of Trade, the heads of the institutions, chairman of the Manufacturers Association, and the executive of the association. On behalf of the Secretary General, I would like to thank you very much for inviting us at the Secretariat to be part of the symposium on unpacking the budget. Now, I have just a few points that I would like to share with the symposium. My name is Silvo Jakol. I am Chief of Staff at the Secretariat, but I'm also one of you. I'm Uganda, but I'm now based in Accra, where I serve at the Secretariat. Now, the few points I would like to share with you concern, first of all, where we are right now in terms of the implementation of the agreement establishing the African Continental Free Trade Area. Secondly, to stimulate a discussion among us yourselves or among us on how we would want to go about, the benefits, how Uganda should participate effectively in this market access initiative. You all know that our president is the champion for regional integration, for African integration. And in that capacity, always advocating for more markets across the regions of Africa, unifying the African continent into one market. So the few points I would like to share with you, first of all, on the basics. The basics are that we are 55 countries in the continent. This is just the synopsis of the agreement. We are 55 member states of the African Union. The population currently standing at about 1.3 billion people, 70% of whom are youth. The total GDP of the African continent is $3.4 trillion. But you can know that this is much below its capacity. We are at $3.4 trillion currently, projected to grow to about $7 trillion, 7.5 by 2035. Our current trade among us ourselves as intra-Africa trade is just about 18% of our trade with the rest of the world, which is low compared to other regions. The EU is at about 60% intra-EU trade. Asia is about 50%. North America is at about 55% intra-North America trade. But what we also want to note is that the African continent has a significant amounts of natural resources, diverse strategic minerals, arable land, standing at about 860 million hectares of arable land, aquatic resources, forestry, livestock, fisheries, and so on. So now the agreement that establishes the African Continental Free Trade Area is comprehensive, and it includes the protocols on trading goods, trading services, on investment, competition, digital trade, intellectual property, and the heads of state have asked us also to do a protocol on women and youth in trade. And as is known, in every agreement, there will always be disputes. And so we also have a protocol on rules and procedures on the settlement of disputes. The main aim of the agreement is, of course, to unify the African market into one, with the aim of boosting intra-Africa trade as well as investment. Currently, 55 countries have signed the agreement. Only Eritrea is yet to sign. And then the ratifications, which signify the acceptance by the member states, 43 countries have ratified the agreement, including all the EAC except South Sudan. South Sudan is the only country among the EAC partner states that has not yet ratified the agreement. The current operational protocols are only three: is trade in goods, trade in services, and the rules and procedures on the settlement of disputes. The other protocols are currently under negotiation: investment, competition, digital trade, intellectual property, women and youth in trade. All these are being negotiated at the moment, and the negotiations are advanced. I see from Accra, where we usually hold the meetings, I see a number of Ugandans coming in for the negotiations in the various areas that I have mentioned. Now, in terms of the modalities for tariff liberalization, 90% of the tariff lines are to be liberalized over a period of 5 to 10 years, depending on the level of development. The developing countries in Africa liberalize over a period of 5 years. The LDCs liberalize over a period of 10 years. And then 7% of the tariff lines have a 10-year transition period and a 3-year liberalization period, meaning that in the end, within a period of 13 years from 2021 January, we should have liberalized 97% of the tariff lines. 3% tariff lines are excluded from liberalization. So what the East African community has done and what other regions have done is to work within their tariff lines. And I'm glad that the presentation by Mr. Mutahunga preceded what I'm saying, that within 5,990 something tariff lines, they play within in accordance with the interest at stake to put the products either 90%, 7%, or 3%, which is the exclusion, which I think is happening in all the regions, but also in the East African community. So far, we have received from the Secretariat, 45 tariff offers, including from the EAC. Now, when the tariff offers are received, we verify them in accordance with the modality that I have just stated, the 90%, 7%, or 3%. Now, 25 offers have been verified and meet the agreed modality, which is the EAC is not yet, because we're waiting for, I think, the decision of the Council of Ministers before we can now verify the EAC offer to check whether it is in line with the modalities that are agreed. Now, in terms of the rules of origin, which has been holding the trading, 87.7% now tariff lines on the rules of origin have been agreed according to the various chapters. The exceptions are on sugar, the textile sector, and the automotive sector. Those three sectors, the rules of origin are not yet agreed. And I think the extra sector is tobacco to a very limited extent. The remaining 12.3% tariff lines, a big part is actually the textile sector. And as you can see, there are many sensitivities from Mr. Mutahunga's presentation. You see that even in the EAC, we are putting the textile sector under sensitive items. Now, in the last meeting of the Council of Ministers in January, they produced what they call a ministerial directive on the start of trading on the basis of the adopted rules of origin, the 87.7%. Very likely in the meeting next week, the ministers will issue another directive, but this time on the area of trading services, because the liberalization has also been going on the area of trading services. Now, all the necessary trading documents are ready. The certificate of origin is ready. The exporter declaration is ready. The e-tariff book is ready. And the rules of origin manual is ready. These documents will be launched by the ministers during their meeting next week here in Accra. And I'm aware that the Minister of Trade and Industry and Cooperatives will be participating in the Council of Ministers next week. Now, the other item that, the other area that are operational at the moment is the implementation of the annexes in relation to customs cooperation, transit, trade facilitation. Now, because of what the EAC has done, you know, in the operation of the Customs Union Protocol, you've done some very good practices in the East African community in relation to one-stop border posts, you know, single customs territory, the harmonization of customs procedures and documentation, you know, advance declaration or pre-arrival declaration, and so on and so forth, and the elimination, of course, of tariff, non-tariff barriers. So the other regions are looking at EAC to benchmark what they can do in terms of the implementation of the FCFTA. And there has been a study mission, I think 2 of them, from the ECOWAS region, where now the implementation of the annexes of customs cooperation, transit, and trade facilitation is taking up on the Abidjan to Lagos corridor, but they are benchmarking on what we have done in the East African community. The other aspect is the non-tariff barriers, monitoring and elimination mechanism developed with partners, which is currently operational. This one is also benchmarking on what the NTB elimination mechanism that we adopted both at the East African community as well as at the COMESA. And I remember in the morning that the minister talks about the standards. The annexes related to standards development, harmonization are also being implemented in partnership with the Africa Regional Standards Organization. And I had Mr. Ebiru mentioning that they are now on the board of ARSO, the AROSO, which is the regional standards body for Africa. We have an MOU with them because we realize that standards are critical in terms of beginning to trade across the continent. Because if we don't harmonize the standard, then the goods will find it difficult to cross the borders because of the standards regulation of the different trading parties. In order to implement the agreement establishing the African Continental Free Trade Area, we realized that intra-Africa trade is low owing to different factors. Of course, challenges of interconnectivity in terms of infrastructure, energy networks, ICT, and so on. But also more importantly, in terms of the low value addition to what we produce. And as a result, we have identified 4 regional value chains that we wish to develop in partnership with the member states and other partners. And these value chains are falling in the following sectors: agro-processing, largely that means food items, livestock, poultry, and so on and so forth. Second sector is the pharmaceutical sector. Now, this one is critical because of what happened to us, you know, from 2020 at the time of the COVID, and you know, supply networks were disrupted terribly, and we could not get the supply that we needed. Third sector is the automobile sector, and then transport and logistics to be able to interconnect the continent. So those 4 sectors are priority in terms of the development of the regional value chain. That would then enhance intra-Africa trade, but also enhance trade between Africa and the rest of the world. Now, there are accompanying measures because we realize there are obviously well-founded fears about opening up markets and so on. and the adjustment that will result from it. So there are about 4 or 5 accompanying measures that are being put in place. The first one is the AFCFTA Adjustment Fund, which is expected to support member states to address challenges that they may encounter while implementing the AFCFTA. Now, this fund is being established with the African Export and Import Bank, Afrexim Bank, and I know that they have an office in Kampala. And there is already $1 billion that is in that fund for the adjustment facility. But the fund has 3 pillars, which can be explained by the representative of Afrexim Bank. The first pillar is the base fund, which is a grant. So anybody, everyone can put money in the grant for the member states to be able to draw to address some of the shortfalls that may come as they implement the AFCFTA. The other 2 tracks are a loan facility for the private sector to upscale their productive processes, but also a loan facility for the government. Now, the $1 billion is currently available. However, the aim is to build this fund to 40 billion in the next 5 to 10 years. The second accompanying measure is for the automotive value chain, the automotive sector value chain. There is also currently $1 billion to support the automotive sector, provided that the rules of origin are met. So companies like Kira Motors, Kira EV could probably be able to access that facility of the automotive value chain. The Pan-African Payment and Settlement System, which is premised on our regional payments and settlement systems that have been operating in the different regional economic communities. So this is meant to not really to overcome but to enable the private sector to be able to make quotations in local currency. And I had the chairman talk about the East African currency, I think, which is now being discussed. So the Pan-African Payment and Settlement System, again with a platform at the African Export and Import Bank, where exporters, importers would be able to, exporters would be able to make their quotations in the domestic currency. The SME Women and Youth Trade Facility, this one is currently under discussion with the African Development Bank and also with the African Export and Import Bank. Now, there are projected benefits of the AFCFTA. We've done a study with the World Bank 2020, but which we upgraded earlier this year. Of course, the study at that time did not anticipate the fallout of the Russia-Ukraine war. So in the study, we're estimating that by 2035, the tariff reduction and the elimination of non-tariff barriers would lead to income gains of about $450 billion US. But out of that, 292 billion continent-wide would be from the implementation of the trade facilitation measures, the customs, the harmonization of customs, the easing of movement of goods across the continent. Furthermore, in the study, we looked at a single African market, harmonizing trade and investment regime, which is likely to attract cross-border investment, but as well as FDI, leading to technology transfer, the creation of jobs, and the enhancement of national capacities. I know that UMA has done a tremendous job since 2020 at the time of the COVID to upscale, but also to re-engineer their production processes to meet the domestic need. But that can now also be upscaled and upgraded to meet the needs at the regional level, but also at the continental level. In improving moving up the value chain, the parties under the AFCFTA will trade more among themselves, but also improve their trade portfolio with the rest of the world. So in the face of growing regionalization and diversification of supply chains that resulted from the COVID, we believe that the FCA provides an additional incentive for the private sector in Africa to scale up their production. There are challenges, as I said in the beginning: infrastructure interconnectivity. There is a deficit, energy networks that would enable higher levels of industrialization, ICT connectivity, and the cost of that ICT. It varies from country to country. In some countries, much higher. In other countries, it's much lower. Now, moderator, let me turn to why is Uganda in integration? And I know that the Honourable Minister in his remarks touched on some of this. The first point is the expanded market. Alone, we know that we are a small country and a small economy, and therefore, for purposes of trade and investment, we need access to bigger markets. But we also need access to the sea. In your own remarks, moderator, you talked about, we are land-linked, but we are not comparable to the countries that have sea coast. And so we need access to the sea. And that is part of why we are in integration. But we also want to leverage the regional opportunities for our rapidly growing population, so that there are opportunities that will be opening up in the region for our growing population. Peace and security, and I know that the Honourable Minister referred to this, because when you live with your neighbor at peace, then you are secure. If you don't live with your neighbor in peace, security actually will elude you. So what are the steps that Uganda should take in the FCFTA? Should we go there in the first place? I think we should. We should look beyond the EAC and look beyond the COMESA for market, but also for investment linkages. Now, the quick question then is, beyond the EAC and beyond the COMESA, where in Africa should Uganda be looking at as a market for trade, but also for investment? What are the product areas for export trade? What are the areas for imports that we would wish to have? Who are the partners? What cross-border investment do we seek? So these are the questions that probably we would want to raise. Now, in terms of the target areas, I think West Africa, the ECOWAS region, as well as North Africa, is a very good bet for Uganda. And the reason that I am here and I see lots of imports of rice, milk, beef from Australia, beef from New Zealand, milk from Belgium, from Netherlands, and of all places also from Singapore, which is a small island state that does not keep cattle. But we have milk from Singapore on the supermarkets. So we have, in my view, some product areas that we could be looking at in terms of the West African region, the ECOWAS region. In North Africa, you realize that Morocco, Algeria, Libya, Tunisia, they consume lots of tea and lots of coffee, but they import it from Europe. They import the coffee from Germany, Switzerland, Italy, Spain. Those are the countries where they import the coffee and the tea from. And yet the tea moves and the coffee moves from our market. So in my view, those are the areas that would wish, in my opinion, that we could be looking at for trade beyond the COMESA and beyond the East African community. Now, in terms of the imports, I know that some of the imports that we have in our own portfolio include palm oil, and there's palm oil in West Africa, rubber. I know there is a budding rubber products industry in Uganda that is producing tires. There is rubber available in Ghana as well as in Cote d'Ivoire, strategic minerals for industrialization, and so on. So what are the cross-border investments that we should seek? I think the automotive sector is one of them, agro-processing, but also the pharmaceutical and fertilizer development from countries such as Morocco and Algeria that fairly advanced in fertilizer making. our approach, in my view, first of all, we need a national strategy. I know there is the export development strategy, but what is the specific strategy that we should have that should focus on the opportunities that are available under the African Continental Free Trade Area? So I think we need a national strategy that focuses on the AFCFTA. Beyond the national strategy and beyond the agreement, I think that we need a bilateral approach. Bilateral approach where the government of Uganda, moving with the private sector, should now approach the potential trading partners, whether in West Africa or in Central Africa or in North Africa. So that bilateral approach would be critical to kickstart Uganda's efforts in FCFTA trading. Within the protocol on the trade in goods, there is an article that states that nothing in this protocol shall prevent two or more state parties from extending to one another preferences which aim at achieving the objectives of this protocol among themselves, provided that such preferences are extended to other state parties on a reciprocal basis. So in my view, a bilateral approach by Uganda would be the way to start to move into the trading with the AFCFTA or within the AFCFTA agreement. So a combined official and business mission to Anglophone West Africa, Ghana, Nigeria, looking for export, import opportunities, but also joint ventures in terms of investment. Similar mission possibly to Algeria, to Morocco, and then a national trade development committee that is multi-sectoral in nature, that has the public sector, but also the private sector. I think I will close by saying that the FCFTA provides opportunities for Uganda to look beyond the EAC and to look beyond the COMESA for export, for import, but also for joint ventures. West and North Africa could be the target areas that we should be looking at, and a number of sectors that would offer export competitive advantage. That would include coffee, tea, livestock, and livestock products, poultry and poultry products. And of course, we need also to look at the joint venture opportunities that may be arising. And I know that you started already with the DRC, with the business mission that is looking at trade as well as investment. Those kind of efforts should be extended to other areas of the continent. And as we wait for the decision of the EAC Council of Ministers to discuss the tariff offers by the East African community, my view would be that Uganda could begin to organize business missions to some of the regions that I have mentioned above for business-to-business linkages. Thank you very much. Over to you, sir.
Thank you very much, Mr. Jakol. I know we did wake you up rather early, but you've ably talked to us about what is at stake at the continental level. Mr. Jakol is one of us, has been with the Minister of Trade in the past. He's now based in Accra, and he has graciously indicated that for any follow-on questions, he will be happy to give written responses to whoever has questions about the African Continental Free Trade Area. And we'll be definitely organizing more of these sessions. I'm mindful of time. We've run way out of our leeway on time, and I want us to switch quickly to the interaction with the government representatives here. And to take us through that session, I wish to welcome one of our directors on the board of UMA. Substantively, he sits at the PICFAIR Group. He's also the head of our Economic and Policy Committee of the board. That's none other than Mr. Richard Mobidu. Please take your seat, and I will hand over the panel to you to then take us through the rest of the program.
Good morning, ladies and gentlemen. I want to say that all protocols observed in the interest of time. My name is Richard Mubiru, and my job is a simple one, to transit into really now, listening into government. And on that note, I would want to start by constituting the panel. I will start with Mr. Kagwa Moses, the Director of Economic Affairs, so that he can take his seat across here. A round of applause as he comes. Next is Mr. Benson. Anyway, sir, free seating. Next is Mr. Benson Puramye, Executive Director, PPDA. Round of applause as they take their seats. Next is Mr. Rujoki Musinguzi, the Commissioner General of Uganda Revenue Authority. We also have Dr. David Ebiru, the Executive Director of the Uganda National Bureau of Standards. I now move to the Chief Executive Officer of the Uganda Insurers Association. We are expecting representation from the Electricity Regulator Authority. Here we had Engineer Zilia, but I want to imagine there is somebody from ERA. And once that somebody is around, you can please take up your seat. Anybody from ERA? In the absence of ERA, I saw a very dangerous substitute on the export side. Our very own Mr. Okecho. He was in the room. He was in WUMA for many years, and he decided to cross to government so that WUMA can export. A big round of applause. Thank you very much. Members, we now have the panel fully constituted, and to set the stage for our interaction with the panel, we have got a very able team from manufacturing that will be asking a few questions, really comments, so to speak, in reaction to the presentation made on budget. By no order, I would want to pick a few comments from those people that I will be mentioning. May I start, ladies first. I will start with Mrs. Reste Segawa. Somebody with a mic, very quickly, please. A few comments as we set the stage. Yes, the mic is from Ridia. Thank you very much.
Thank you very much. All protocol observed. Good morning. My name is Segawa Resti, and I'm representing East African Roofing Systems. We are steel manufacturers, and we produce under the brand name of Tiger. So, my comment, I'll comment briefly on backward and forward integration. As the steel sector, we present one of the biggest avenues for this country to go both backward and forward. But as a country or as a steel sector, there are challenges that we are facing, although there are very big opportunities for us. Number one, if as a country we could do both the backward and the forward, a few of the opportunities we have as a country, we have a lot of land. Many of you have gone to the villages and seen a lot of land. We have very good weather in Uganda. We have labor. There is peace and security in Uganda. And then also as a country, we are educated. Then for backward integration, it offers an opportunity for our country to do import substitution. Then also as a country, backward integration would help Uganda to quickly become a manufacturing hub of Africa. You see, like the China that we see and we admire, we can actually do that. The minds here are very capable of doing that, if only we can sit together and agree. And also, an opportunity for backward integration is the economic growth of the country. I think with backward integration and even forward integration, there will be no debate as whether Uganda has entered middle status or not. We would actually be seeing. As many of you are, the economy is biting hard, not just in our pockets, but even in the pocket of the common man. But as the iron and steel sector, we are facing challenges to do this. Number one of the challenges is capital. We don't have affordable capital. Yes, government has said that they have put money in UDB, and true, the money is there. But to access that money, UDB has like a whole list up to the village. They want to just, and I don't know, you'll put in your request, but you can only get the money like after 6 months. And as an investor, how is that going to help? And then also, another challenge that we are facing is the infrastructure development. Government has talked about the railway, they have talked about the gauge, but it's not coming on board. I don't know what is happening. And then also, we lack skilled labor. Yes, we have so many university graduates, but they are not actually being taught as per the demand that is now on board. We need more technical schools. You see what happened when they were bringing on the Petroleum Authority. There was a lot of advertising on petroleum, the opportunities that were coming, courses started coming up very quickly, and people actually went for these courses. And you can see there are so many people now in the Petroleum Authority. We need to do that also for the steel sector. We need more schools, teaching technical schools. Then we need the cost of production to go down. The cost of power is very high. The cost of operation is very high. Right now, the fuel is entering 7,000, and I can guarantee you, in about 3 months, we shall be entering 10,000. Imagine 10,000 for 1 liter. It's very high. Then also, as government is also telling us, the ones who have money.
Rest as
Yes.
you conclude, because it will be 2 minutes for each one of you, in the interest of time.
Okay, let me conclude. This is what we want the government to do for us. As government is pushing us, we need to have the competition law, and whoever needs to work on that should start right now. The competition law should come on board. Then we also we need consumer protection. Then we also, as a nation or as a Ugandan, we need to have some laws on profit repatriation, so that as a country, not everything is going out. Then, last but not least, I think I have mentioned all. Let me conclude.
Thank you very much. A round of applause for Reste. And members who will be making interventions, let us keep it to 2 minutes. Next, I will pick Mr. Bulger to make comments. He comes from the plastics and allied sector. Your viewpoints on budget.
Good morning to you all here. When I say plastics, everybody is staring at me as if I'm the one polluting the environment here. But I will finish in the 2 minutes you have given to me. You see, plastics is the most beautiful invention what man made here. And everybody is against to me here in this hall. But see, that is the only material which you can recycle it thousands and thousands of times and reuse it over and over again for centuries. Now, any person here can't imagine a life without plastic. From the day you get up, use a toothbrush with plastic, and the day you sleep, you keep an alarm in your phone which has plastic here. And environmental protection. Now, everybody is looking plastic as environmental protection, but is that the plastic is the only environmental pollution content? The deforestation, the vehicle emissions, the flight emissions, all these are not environmental damage causing issues. So here I would like to bring to your notice that everybody plastics means they say only kavera and a bottle. or PET bottle. But plastics is not limited to cover or the PET bottle. There is textile, plastics is in textiles, plastics is in furniture, foam, electronics, cosmetics, agriculture, sanitation, printing, medical, engineering, and so on. So plastic is in part of life. Plastics, without plastics, there is no economy growing here. So to be more clear on this one, we need to investigate and understand the pollution caused, the factors causing the pollution, and we need to, yes, we need to definitely control the pollution, but not by having myth that plastic is the one causing the pollution. Imposing excise duty is a solution to protect the environment. I want to ask each decision maker here and the government representative here. I read in the previous budget, by imposing the excise duty on the plastics, we can save the environment. And we have passed 1 year. We have been raising our concerns. None of them have been concerned. Did we reduce the pollution in the last 1 year? Did we reduce the temperature change in the last 1 year? Or at least, did we change the direction to reduction of the pollution? Plastics are used in domestic usage for single-use items. It is also used as packaging materials in the industrial use and also used as ingredients in other products. If taxes are imposed on plastics, so what does it cost? Increase in the production cost? So many feel that when cost is increased, the utility reduces as affordability reduces. But when cost increases, all the products from sugar to coke, soap to laundry services, cosmetics to paints, it adds as a catalyst to the inflation. But it will not have any impact on pollution, as majority of these plastics are recyclable and which are being recycled every day. In the interest of the time, the other issues we have been bringing to your notices every now and then, but it was never meant for. And I'd like to conclude saying that if excise duty is meant to reduce the plastic production, it means it is leading to reduce in the production of an economy. Is it the right way to deal the pollution? Is it prudent to make policies to reduce the gross domestic production of the economy? When production is reduced in economy, does it add value to the contribution to the budget? What I feel, to reduce the impact on the environment, we need to go to the business with the solutions, not just increasing the taxes against them, not destroying the business, because that does not going to work. Because economic concerns of a business and economic concerns of a nation are very important. If it is economy versus ecology, I am asking you all here, if there is a fight between economy and ecology in your home or in your community, what will you prefer? Obviously, everyone prefers for economy rather than ecology. If a sustainable solution needs to be designed, it has to go with the business but not against the business. If we feel a certain industry is causing damage to the environment, it should be transformed but not destroyed. So if there is a fight between ecology and economy, economy will always win. If ecology has to win, it has to marry the economy and go with the economy, but not against the economy.
Thank you, sir. Very loaded words, but I know we have a very able panel. Matters are to do with basically excise duty. We have them, they will be responding. Can we now pick Simon Kaheru? Simon Kaheru is online. And if we are ready, we can pick him very quickly. Are we ready?
Thank you. Thank you, Director Richard Mubiru. I hope you can hear me.
Yes, we can hear you.
Very good. And Uma, thank you as always for establishing such great opportunities for engagement with our government partners. And very, very especially, thank you, our government partners in development, for always being ready to hold such dialogue sessions with us, the manufacturers, private sector. And Mr. Mutahunga said we have summoned you. It is true. We're the ones who pay the taxes that you use to run the country. And it's on that note that we're always happy to have these conversations before and after the budget reading. The budget reading is only one specific event. One of the key topics that I've been asked to highlight, and I only have 2 minutes, so I'm going to be very, very tight with this, is the need for predictability. Kenya is leading the way very well. They have a national tax policy in draft, which is looking to have 3-year cycles in especially tax management. This is something that we discussed with you, and we are looking forward to implementing during the course of the next cycle. And we believe that it can work because it will support our predictability. in doing business. And without predictability, we simply can't do business. The other item that I'd like to highlight is digital tax stamps, and actually call it tax administration. Mr. Chambade from KPMG highlighted the different tax administration measures that have been implemented and some of the wins that Uganda appears to have achieved. Though we still have questions, and we believe that we should have deeper questions about these measures and how effective they've been. We are not to represent our compliance, and we will continue to be compliant because it's a very simple equation. The more money the government has, the better services you can provide for the people and for the infrastructure so that we do business, okay, and the economy thrives. And if the people have more money because the government has provided the right support, then they will purchase our products. That one is a no-brainer. Where we have questions and we are proposing conversation is the manner in which these tax administration measures are put in place. And digital tax stamps is the perfect example of this. I can cite a study done in Tanzania by industry there, together with the Ministry of Finance, TZ. They found after 2 years of BTS being implemented there they call them electronic tax stamps. And I'm looking at the numbers here. But stamp costs rose by 680%. Excise duty payments dropped by 1.7%. So there was no match. There was very little logic to why those tax stamps were introduced. However, the good figure is more manufacturers were identified because of the solution. So the solution does make sense. And we always welcome these tax administration measures. Where we have questions is how effective are these measures? In that same study, there were some key findings that as Uganda we should take note, and I'm happy at this point to notify you that we're having conversations about conducting a similar study in Uganda, and we want to do it together with you in partnership, the government partner. One of the key findings of that study was that Mauritius has a 10% lower digital tax stamp price than Tanzania. Rwanda's is 11.8% lower than Tanzania. Zambia, 165% lower than Tanzania, and yet Uganda, 50% higher than Tanzania. Why the disparity? When the provider is one and the same, your guess is as good as mine. We really need to have these conversations sooner rather than later. We have a great opportunity before us because I believe we are now approaching a review period. And we have three key recommendations that we can put forward for us to one, allow us to pay taxes, encourage us to pay more taxes, but you take the administrative costs, because that is what the relationship is supposed to be. We collect the taxes from the consumers, pass them on to you, you remove your administrative costs, pass on to the rest of the government to provide services. Digital tax stamps is an administrative cost. To have business pay that fee directly, it's questionable. And we've said this from the beginning. Luckily, and I'm happy that the colleagues on the panel are those who we respect and speak their minds very, very clearly. We all recognize this together because we are all Uganda. For those in the room who may not know, the manufacturers that pay for digital tax stamps are private companies that pay those fees to another private company. Now, that brings us to the second recommendation. Let's have rationalized costs. Okay? As I've indicated, the cost of these digital tax stamps in the different countries is not making sense. And yet, this is not a product that is comparable to the plastics Mr. Balter was speaking of, or the contents of some of those plastics like I produce together with my colleagues. These costs can be made more rational and more sensible. Even better, and this one speaks to what our chairman said at the very beginning about investment, which most of the speakers have spoken of. We need to invest more in this country, in Uganda, and in this region, East Africa. I'm on my way to Arusha to have the same conversations, and I believe Mr. Mtahunga is coming along eventually. We cannot invest if we are getting this money and sending it to Switzerland to pay for tax stamps. And that's why the private sector is here to also give you additional support as the government. To be quite frank, we should be your consultants when you're negotiating some of these costs and contracts. And I'll leave you with this. We would be very happy if you went into arrangements of this nature and demanded that the supplier is paid a percentage of the revenue increment in excise duty collection. We as the private sector, that's how we would work a contract like this. We would not pay them a lump sum money without visibility of success. We give them a target and say, this is how much excise duty we are collecting without your intervention. We are signing on your intervention. If you can increase excise duty collections to this point, you will earn X% of the increment. That way, the money stays here in Uganda for use in developing Uganda together and to grow our consumers. Thank you very much.
He has gone. A round of applause for Simon. Over digital tax stamps, Simon can go on and on and on. And on that note, allow me to transition to the panel, to Commissioner General. I think it is all cut out for you, but just to add something that you missed out, because I know that actually the chairman of WUMA made the address when you are not yet here. The key thing that stood out was something to do with audits. These compliance audits are going way back to 10 years and beyond. And this is a major problem for compliance. Hey, I thought somebody was clapping. Now, how it plays out is that URA expects that somebody should keep books for beyond 10 years and should be paying penalty for URAs having failed to audit actually within maybe a year or 2 or 3, and therefore it ends up increasing costs of doing business. That was one of the things, but allow me to add 2 other things such that you come in at one go. The issue of broadening the tax base. The feeling at WUMA is that we are overtaxed as manufacturers, and the feeling is that there is a big informal sector that you can tap into. So we want to pick your brains in terms of what you are doing as an authority to really up your game in the informal space. But lastly, how are you going to manage the penalty? We know they gave you an open check, and you have heard it from none other than KPMG in terms of how penalties can collapse businesses. Please come in and react to all, such that when we then transition to another intervention from the audience. Thank you very much.
Thank you very much, sir. Dear distinguished guests today, the panelists and all the various speakers at this symposium, let me start by appreciating WUMA for organizing this very important discussion and for inviting us to participate. As one of my colleagues said earlier, it's a pleasure of government to join our partners in developing the nation whenever you have such engagement. So I'm very honored to be here, and apologies that I joined in a bit late. But I'm very, very happy at the discussions that I've listened to while here. Now, let me start with the issue of audit. Audits, indeed, it's a very difficult thing to pay taxes that you have not been able to pay over a period of 10 years. In many times, the bill is what the business cannot pay and survive. And again, the practice at Uganda Revenue Authority is that when we come in for audit, the recommendation and the practice is to audit 3 years or less. However, in cases where there has been tax fraud, we are forced to investigate backwards. So it is in very limited investigative cases of audit when we have to look at a period beyond. Because where fraud has been involved, it's not easy to just make a decision that we start from 3 years going forward. So what are the cures to this kind of lengthy audits? For me, I think there are 2 things. One, on part of the taxpayer. If you know that there are some tax issues that have not gone right, utilize the voluntary disclosure window. Come on your own before any prompting from Uganda Revenue Authority and declare any tax matter that has not been going right in your organization. Using the voluntary disclosure window, the law allows us, one, to take what you have declared, but also to waive off any penalty and interest, as long as what you've declared is honest. So you must not declare for the sake of declaring, you must declare honestly what went wrong. Then you will be exempted from any penalties and any interest, which in most cases is the biggest challenge that makes companies fail to fulfill their tax obligations. Because if you've not been compliant over a long time, by the time you calculate the taxes not paid and the interests and penalties, then the bill becomes unaffordable. But also number two, the practice that we've put on the side now of Uganda Revenue Authority is to analyze this data remotely, even before we come to audit, so that we can provide you with advisory. Where we find inconsistencies in your declarations, for example, in one return that you make for VAT, you declare something different from what you return for income tax, you declare something from what we pick from IFRIS, then we advise before we come in. We say, our taxpayer, can you please amend your return? We see inconsistency in this data and this data. So going forward, because we are now highly relying on data analysis, we are able to detect some inconsistencies in your tax issues, and even before we come for audit, we advise you to improve. So we will be proactive on advising you. Why we take a long time, Director, is because of manpower constraints. We have limited resources and we have many taxpayers to serve. So that causes us to take so long. So while we work on automation, we will be able to advise you even before we come for audits. But strongly embrace voluntary disclosure, sort out your tax issues before we come in for an audit. And we will only extend beyond 3 years if the audit reveals some element of fraud, and therefore we are obliged by law to look at a longer period than that. Quickly, what are we doing about broadening the tax base? Now, as you heard from the Honorable Minister and the area speakers from government took a deliberate decision not to introduce any new taxes in this new financial year. And what that means for the expected revenue contribution, which is 3 trillion plus, more than what we have collected in the previous financial year, we will have to rely on revenue efficiencies. We have to rely on voluntary compliance of our taxpayers. So the way to cover this big revenue gap, which we have to as a nation provide for our basic needs, we will have to broaden the tax base. And this is where URA is working deliberately. For example, at the close of the last financial year, we had grown our tax register by an additional 830,000 new taxpayers. If you remember, at the close of 2020-21, we had about 1.7 million taxpayers. As we closed this financial year, we had 2.56 million taxpayers. That is an exponential growth, and we want to sustain that kind of effort so that by the year 2024-25, we have at least 5 million Ugandans contributing to tax. Of course, there is a period of onboarding these taxpayers, of educating them on the obligations. So as soon as you bring them, they may not contribute within the first or second month, but that process is on, and we are bringing more Ugandans to contribute towards this noble responsibility of paying tax. And we are using what I've already mentioned, third-party data analysis. It tells us who is doing business with who, and that helps us approach them and register them for tax. Very quickly, the issue of penalties. Yes, I feel the concern about the heavy penalties. But again, I would like to assure our partners in the manufacturing sector that this should not be an area of concern for compliant taxpayers. If you read the provisions in the Tax Procedures Code, penalties are for literally the bad guys, the people who want to forge tax records, the people who want to forge IFRIS, to tamper with the system of IFRIS, to make partial transmissions, the people who want to forge receipts, the people who want to forge or not to apply digital stamps. So for the compliant ones, let's not worry about penalties, because essentially that's what penalties are for. Penalties should be punitive enough to deter us from attempting. And we are learning from the best. We've done some benchmarking. For the nations that take issues of taxation seriously, you have no option but to make any non-compliance very, very unattractive to keep people in the lane. So I think as members of the manufacturing sector, you have little to worry about penalties because you've been compliant, and I think that's where I should have started. I want to thank the members of manufacturing sector. You have been extremely supportive in the effort to develop this nation. Consistently, you are the #2 contributors on the revenue collections every year, just following shortly after wholesale and retail. And the last financial year alone, you contributed almost 5 trillion. That is very commendable. We thank you. So let's not worry about the non-compliant guys. Actually, the penalties will help secure the market for your products which have paid tax, and you will sell more. So I'm here to assure you that we are partners in this effort of building the nation together, and our relationship is mutually beneficial. We clean the market of illicit goods that have not paid tax, you sell more. Therefore, it's very, very important that you lead the effort of compliance. And I want to thank my colleague from KPMG, Mr. Chambade. When he was presenting here, I felt he had done a commendable job, and he had covered the emphasis on compliance, because that is the way to go. Thank you very much. I think I can stop here for now.
I forget about this. Thank you very much. A big round of applause to the CG. And I think what is clear, CG, is that engagements should not stop here. The key thing is that people want to pay taxes, but tax administration must be really reconfigured so that it does not result into business closure. I need now to transit to really Minister of Finance, and Mr. Kagwa will speak to us on matters excise duty, especially for the plastic people, as you have heard, but also he will speak to us about 2 other things. I know you came in a little late, but the chairman of WUMA had spoken to the fact that several manufacturers now are big-sized now in terms of depth of pockets, and they would want to participate in especially JV possibilities under the PPP law. And the challenge we have in our country is that the PPP Secretariat, which is under your ministry, seem not to have a ready pipeline of these projects. And every time we hear of one ex who landed in Entebbe 2 days ago promising heaven on earth in Kampala. And before you know, he or she has got a concession saying things that nobody can mention in this room. So the point we are making especially resonates with what she said, Reste, for the steel sector. Yes, we have the MUCO deposits, and we're looking at numbers. Importation on the steel side plus clinker accounts for $1 billion which is 10% of our import bill. It is something we need to have a conversation over, and we will be happy to hear what plans you have. And the last component that you can touch is basically the role of manufacturing in the parish development model. We are seeing political leaders running all over the country, and the parish development model is actually the new gem. Now, as manufacturers, we are yet to know how the ministry responsible for planning has configured our participation in that space. Thank you.
Thank you, Richard. I also want to add my voice to the previous speakers, thanking Uganda Manufacturers Association of organizing this very wonderful dialogue. The chairman, Uma, the board members, Uma, and the distinguished captains of industry. It's an honor to be here and to share some of the things that we are doing in government. But Richard has shocked me with so many questions. Let me see how to handle them. But I just wanted to actually start on a very light note. There was a gentleman, he was a legislator in the US. So in 1963, this legislator was called Russell B. Long. He says, don't tax you, don't tax me, tax that fellow behind the tree. So when a lot of times we come to hear about people talking about taxes and saying the informal sector, you guys, you are not going after the informal sector. Yes, that is valid, but we are wondering where are these people? Most of them are actually hiding under you, and you are saying that we shouldn't tax them. So we are also throwing it at you that help us to unearth these large taxpayers which are not paying. And for the large taxpayers, I've read about Samsung, that in Korea, its contribution to exports and to tax revenue is about 20%, just one company. So we need your companies here to grow. I would want to see East African roofings making a contribution to our exports as a country of 5%. I would want to see Tembo still making a contribution of 10%. And say yes. So we are in this together. And our doors are always open to have these discussions on how we can move forward. One of the thorny issues that Emmanuel pointed out when he looked at the CET was that the textile sector was being protected, overly protected, let me call it that. And the tax now on garments is taxed on kilos. Yes, per kilo of garments is 3.5 US dollars as tax. And I think there is a reason for that. The dialogue the government has had with the private sector, and the need to ensure that the private sector develops. So as government, yes, we are always your partners. We listen. And as Mr. Chambade said, we have a stake in your business because you really finance a lot of our activities. But not to mention that a lot of you are also under tax holidays, and it's breaking us. Yes, we must mention that. Because a lot of, industrialists, you have clamored for tax holidays, which we have given, but it comes at a cost. That's why you see that our debt to GDP is increasing. There is money out there that we could have got as government and put it into the budget. We are financing the budget by 53%. We want to finance it by at least 60%. So we should see how to juggle properly and know the implication of all the decisions we're taking. But specifically on your issues, Richard, the JVC and the PP law, yes, we have not had really a pipeline of projects under the PPP, but we have a pipeline of projects under Uganda Investment Authority. There are so many, and this financial year, government has provided funds in the budget to do feasibility studies so that a private sector can be told about the opportunities and the returns on these investments if they are to make them. So that is a commitment going that side. Two, under UDC, we are partnering with a lot of private sector to ensure that we have provided funds for equity investments to invest in key commodity agro-processing value chains. For instance, sugar, we are looking at the eastern part of the country. Cassava, we are looking at the north and the east. Tea, we are looking at Zombo and Chenjojo. Food processing, Great Masaka, Noya and Kayunga, and then Yumbe and Arua. So there is actually been these interventions and through UDC, and I think we'll continue having that because we know what strategic investments we want as a country. On the role of manufacturing in the parish development model, as you know, the parish development model is a strategy to bring the 39% of Ugandans currently in subsistence into the monetary economy. And this entails, of course, identifying them. It entails making sure that when we give them this money, they are going to use it to be able to produce for the market, because we want them to move from their subsistence to what? So they are going to increase their productive capacity, and they are going to provide raw materials and inputs into the manufacturing sector. We have seen that a lot of manufacturing, if you look at it, right now industry contributes 22.6% to GDP, and that has been growing every year. It grew by 2 percentage points from last year, and I think it's still growing. But one of the things that we noticed is that if you organize agriculture very well, then you would find that the raw materials that a lot of industrialists need can be provided locally. If we have cotton people organized, then they can provide to the textiles. We have seen people in growing sorghum, growing cassava, growing maize, also fitting into the beer subsector. So that's how we are looking at it, that when there is increased production and there are standards, then these people will be able to serve the manufacturing sector, their inputs. Also, when these people have money in their pocket, they will be able to afford what the manufacturing sector is producing. So the market will increase. Finally, excise duty on plastics. I think we have been listening. Anybody who says we haven't been listening, I don't know whether that is a very fair statement. This year, last year, we had moved an amendment on excise duty on plastics because we realized that the impact of the excise duty went beyond what we had thought we are targeting. The polluters, the main polluters. Unfortunately, it went beyond. So we proposed an amendment to rectify that. Parliament did not agree with us. It says, no, you go ahead with this current situation. Working with UMA, we advised, we wrote to the president advising him not to assent to the excise duty law. And he has not yet assented, so we are waiting for his response. Thank you.
Thank you very much, Director Economic Affairs, Minister of Finance, and especially on the reassurance on plastics. Because I know Mr. Boucher and members can be very, very, very passionate, and for the right reason, because I think that imposition of excise duty was going to cause very serious damage. Now, with your assurance, we will always be at your door, sir. Allow me to transition to something that you want to listen to. For manufacturing to thrive, we must have standards, and for there to be standards, UNBS must exist. Really, two things have stood out for UNBS, and this is in the area of PIVOC implementation. By law, we are supposed to have exemption as manufacturers on machinery, spare parts, raw materials, name it. But the operationalization is a major challenge. And members here would want to hear you out in terms of what you are doing, but secondly, as well, in your sector, is to speak to what is it that you are doing for the SMEs. Because reading the budget, we saw that you are given a lot of money to enable SMEs standardize their products so that eventually they can export into the region and beyond. Over to you, sir.
Thank you very much, Mr. Moderator, the Chairman Uma, and ED, and of course my good friends, the sector players in the manufacturing sector. I want to start on reverse, that if you had the increased funding in the budget speech, it is likely that it was edited immediately after the speech, because I've not seen any impact on increase of the UNBS budget. In fact, my budget has gone even down this current year, and I'm already engaging the PSSC to that effect, because I know that some of these figures might not be very easy to know whether they have gone up or down. So when you make a speech without confirming, so you are likely to possibly make a statement that does not reflect the actual situation on the ground. But particularly for our intervention on SME support, this is consistent with the broader concept of promoting the Buy Uganda, Build Uganda, and export promotion policy, the import substitution strategy. So we are looking this as a full package. What the Bureau is now doing is to try as much as possible to help John here. I heard you complaining about John overburdening you. So the Bureau is working closely with John to look for the people the Director Kagwa say hide behind the tree. And the majority of these are really micro, small enterprises whom we want to actually bring on board to start paying taxes, but also make business by being able to put a quality product on the market, not only domestically, but also to be able to export them. So we believe that the growth John was telling you in the taxpayers is actually the people coming out of that hiding from behind the tree. So we are looking forward that in the next few years, indeed, John, we should be able to achieve the 5 million as soon as possible, because if you look at the activity of SMEs in terms of production now and trade, we only need to make sure that we support them and tap them and guide them effectively to be able to be formal. But we have gone ahead as a government, the regulation and the laws help us. So we have gone ahead to tell people that you would rather start to voluntarily comply with the minimum standards before you put any product on the market. So everybody involved in any sort of production or trade, we are saying that yes, we encourage you to trade, innovate, start production, but please do not put anything on the market before you have applied or registered with UNBS. So we have a control now that any Ugandan, regardless of size, so long as you are involved in production and putting any product on the market, that product is not going to sell unless you have actually made effort to apply to UNBS to start a certification process of getting a quality mark. And what that does mean, one of the requirements is that you must apply when you are registered with the Uganda Registration Services Bureau. You need to retain your brand name because of also fighting counterfeit. We don't want innovators to come with concepts and then the big boys with money grab the concept. So they must register their products, names, their brands as part of that certification process. And the other one is John's requirement that you must have a TIN, not necessarily for paying taxes, but want to keep you on the radar and help you with the tax holidays if you qualify, with the tax waivers as you qualify. So therefore, we are having all the intent of making sure that we increase really participation of our local enterprises, especially majority of micro, small, to be formal so that we are able to actually distribute the responsibilities. We are complaining about being a burden of taxes on few people. But for us in particular, we want to make sure that we turn the balance of trade to begin exporting more than actually importing. As Commissioner External Trade was showing you, there is no reason why we can import things which actually produced and made in Uganda. What's the problem? The problem is that let's support our people to start making these things locally, and we start instead supplying the what? The other parts of the world. And the good news I already mentioned that UNBS is now a member of the East African Standards Committee who decide on which standards must be harmonized and adopted. We are now in the board of the African Standards Organization to drive the standardization agenda for one standard, for one application in one market. So meaning that we should be able to take opportunity of this, that standards have gone ahead to open markets. And chairman and members, you know now that even if John gives you a waiver, a holiday is talking about, of taxes, even if some country give you a quarter-free quantity of volume to supply, that country will never give you anything less than a minimum standard. So quality standards therefore become critical for market access for all our enterprises, regardless of size, and therefore we are encouraging voluntary compliance. Just like John says, voluntary compliance in tax must translate to voluntary compliance in standards. Because you business people, manufacturers, exporters now need standards more than me, the regulator. Me, mine is to whip you, to lock you out, lock your facility, but that will not help you. If you voluntarily comply with standard, we will make sure that the market is open for you. Nobody will stop your product. You will be able to have borders opened. The market numbers have been given to you. So we are doing that effectively for supporting SMEs. But I must also add that the Bureau's wish would be if Director Kagwa can convince the PSST and the Treasury to give me what I call SME fund, where I can be able to provide initial free certification of these products for the first year to allow these guys place them on the market so that they can make money and be able to sustain their certification from the second year going forward. Remember now, I cannot allow you even to start putting it, meaning that I constrain you from selling. So therefore, if there was that fund, which I'm advocating together with other development partners, that if we can give initial certification of quality mark for our micro, small, and they place these things on the market, domestic or export, they should be able to sustain paying for that quality mark going forward. So the initial startup is key, and that's one of the incentives the Bureau is trying to do. Now for the big boys, my good friends, John tells you that even behind the good guys, there are people standing behind the tree, and all my manufacturers are under UNBS certification scheme. They have quality mark of their products, and it's true that for the pre-export verification of conformity requirements, we are saying that all inputs that are being brought for production value addition by our certified companies must actually move as quickly as possible. But the challenge is that there are also people behind the tree who actually import the same inputs. So it becomes very difficult for me now to separate whether this is for trade or for my manufacturers. And that's the area we are saying that as a control, John in his tariff chapters and HSE code put this thing together. Whether you are a normal trader or you are a manufacturer importing this, you actually categorize as one. So what we are doing is now to profile our compliant people who are doing genuine value addition and manufacturing, so that within our profile, we know those who must have automatic and fast track release, and then those behind the tree, we can go along to make sure they prove themselves that they're actually manufacturers. What I'm saying is that we also have a majority of people hiding under the umbrella of manufacturers when they are not, because the Bureau does not have a record of what they produce. Therefore, you cannot have the same treatment. But I do acknowledge that such due diligence then can spill over and may have impact on the genuine guys. And we are going to make sure that we have a profile of compliance levels to make sure that we are able to solve that problem. Thank you very much.
Thank you very much, Dr. Ebiru, for that intervention, and especially the last part of it that speaks to partnership with URA. Like we had to share actually on a bilateral, we think that it's so easy for you to know who a manufacturer is, because he has given us codes that distinguish us from anybody who is in Kikubo. Really, the message is seamless access to raw materials, capital goods, spare parts, and we are sorted. Thank you very much. And on the issue of... Moderator, if I could add, please.
Again, for your information, you must also appreciate that some of the manufacturers are also traders. And those are two different treatment, two different categories. So do not take advantage of being a manufacturer to spill over to your trading business. So that one we handle it separately. Thank you.
We don't have bad guys. URA has already confirmed, and we clapped. Thank you so much. We would want now to pick two interventions from the audience, because we are talking about agro-industrialization. And we have two interventions that will speak to us about agro-machinery, because again, in this sector we have challenges. Because as you know, for capital goods, like Mr. Mtahunga told us, they are supposed to come in at zero. But then there is emerging capacity in that space that then is disrupted because of that treatment. Somebody in the person of Mr. Jim Middleton will be speaking to us about that. And if he's ready, I want to give him the mic at this point. Thank you.
Hello? Hello? Yes, you can hear me now. Yeah, we were...
Be able to start the process of the review and what we should give and what we shouldn't give. Thank you.
Thank you very much, Mr. Kagwa. I always like clarity, and I'll seek clarity on behalf of Jim. I think what Jim would want to pick really from government is whether or not there is a possibility for him to move back to zero rated from exempt now. Because as you can see, on one hand, government is rolling out parish development model, which requires actually to buy from him.
If you grant an exemption, then that means that to try and provide some kind of level playing ground, you must zero rate local production. When you zero rate local production.
Thank you very much.
Okay. Thank you very much for this opportunity. And I know we have run out of time, so I'll try and be very brief. I think one of the key things I can say for sure is that over the years we have had increased visibility and access to most of the government offices. For me, that's another big thing. We have visibility, we can see what's happening. But on the other hand, I think that there's a very big misunderstanding between agriculture and agro-processing. In the agro-processing sector, we have so many things that we need to do. I've just written down a few things where, in terms of investment, development, we are looking at sector integration, we are looking at market trends, we are looking at involving people in the industry. Right now, it is very difficult to get very good skilled people in the agro sector. In the next 10 to 15 years, for sure, if we are not serious about investing in this sector, I think a lot of the skills are going to be lost, and we're going to have many foreign companies that are going to come in and take care of this space. One of the key things we need to focus on is that agro-processing provides food security for this country. Food security is what is going to drive that are happening. Nutrition is low. Actually, I can go on and on about this sector, but what I want to focus on today is maybe on the regional setting. We have the EPZs in Kenya. The EPZs produce products for export, as far as I understand. But many of those EPZs also find their products in Uganda. So we are trying to protect some of these industries, but they're bringing in ingredients from outside the market in terms of raw materials, producing, then you have the country of origin as Kenya, and then bringing them into the country. I can give simple products like milk-based products, sugar-based products. Some of these, even cereals like grain, they do a lot of importation. So some of these are being used as ingredients and the final products finding themselves here. And we have some challenges on how to address that. In terms of long-term investment and finance, I think we really need to have a very big discussion on how to treat the agriculture sector. A lot of the investments in the agriculture sector are very long-term. You've just had the gentleman speak about the investments that he has made since 2014. It's just dropping. We should be looking at an upward trend into people that are investing in primary production. If you look at a downward trend, then there's something happening that is not right. In terms of financing, I think we can look to greater markets that have developed banks very specific for agriculture. In this sector, we try to do a project. Unfortunately, Simon, if he's here, he can tell you the challenges we had in just getting our primary production areas to comply. We invested a lot of money, but we had the policy in place, but we had a problem with interpretation of policy between the regulator, who implements the policy, and the author of the policy. Up to today, I can tell you it hasn't been solved. We have brought this forward, we have discussed it. This is on excise duty. You know, getting the right mix is very critical. And I think if you give us an opportunity to have these open discussions, the minister was here earlier. We have a minister of agriculture, we have a minister of trade. All these intermarry, and we need to invest a lot of time as an agro-processing sector in integrating our activities with what is happening. I've run out of time, but I would like to, at least if you can handle the EPZ issue first on policy, then the rest we can handle locally. Thank you very much.
Thank you very much, Brian, for those interventions, but I think the takeaways could be three. One, I want to place one of them with Ministry of Finance. I know that they have got a private sector development unit. I think this is one of those units that we have not yet utilized optimally, I must admit, as a member of the private sector. And I can see that the detailed conversations that touch the economy and so on can be best managed that way. And I think Secretariat will pick it, and then we see how we manage things from that perspective. I know that on the EPZs and so on, and materials coming in from Kenya that were supposed actually to be only for the Kenyan market, but ending up here, Mr. Rujochi will handle that on the second round. Allow me to transit into now speaking matters insurance. We had your submission earlier, but I think the key thing that stands out for now is export guarantee scheme. And it's good that you are seated next to somebody from Export Promotion Board. I can tell you for a fact that Uganda can double manufacturing exports without going into any new, actually, capex. Because on average, the best capacity utilizer in manufacturing is anywhere in the region of 67 to 70%. So this is something that is very key to us. We don't want a scenario of what happened to Sudan for the traders. Then you create another revenue requirement, additional pressure to my brother Rujoki, just because government must provide for money off budget to compensate people. We would want to have a product and want to run with it. How fast can we? Over to you.
Thank you, Director. And I think in my earlier submission, I touched a bit on the export guarantee scheme. Now, I must first of all mention that the insurance industry is a highly regulated industry. And I have heard from this room a number of colleagues that have complained about the regulatory regime that they are facing. Now, in addition to everything that you're facing, the insurance industry also has a specific regulator with specific requirements in view of risks that we take on, but also in view of expectation in terms of how we treat those risks when we take them on. Now, I will tell you that the export guarantee scheme is something that is workable. It is something that much as currently we are not underwriting it directly, but it is something that is workable. And there are two things I want to bring here. The issue of data. I will tell you that for me to give you a guarantee that, yes, indeed, if you export to Congo, I will compensate in case of a failure to pay, there is information that I require. There is information that I require from the buyers in Congo that probably we don't have control over. But also, how do I ensure that I am giving you a guarantee on a person that I do not know details of? I think for me, if we can remedy the issue of data, if we can be able to collect as much information as possible in terms of some of the challenges that you're also facing as exporters, because that is key. Because in us understanding the challenges that you face, then we're able to come up with appropriate interventions. But also, I need to provide comfort in this very room that much as we may not be able to offer these guarantees directly, you can still contact your local insurer and they will be able then to connect you to a specialty market. Because these guarantees are a bit of specialized risks. What we are doing currently is that for as long as this risk is at play, we will be able to new ventures directly and assist our
comments on the regulation in November 2021. We are coming to an anniversary of, and the regulations are not out. I can tell you, you could have missed the comments of my chairman, but in his own words, he said this is unacceptable. Because you cannot wait for regulations for 1 year. Now, that will be one of the components. The second, in the interest of time, is the e-procurement. We thank you. It has taken root, and it will make life very easy for Mr. Rujoki and the rest of the regulators. And we can only ask for more. When can you cover the entire government? Thank you.
Thank you very much, Richard. First of all, let me just give some preamble to your question by first thanking Daniel Birungi for calling me from my leave. I was chilling in Rukunjiri, my country home, and he summoned me here. So why did I come? Why did I actually have to respond very quickly without giving excuses? One, it's because he told me the engagement we are going to have is with manufacturers, important people that contribute to this economy. Number two, you should know that you are the ones paying for my salary. The taxes you pay to Mr. Rochi, eventually they translate to me as my monthly salary. So you are my bosses, I have to be here personally. First of all, I want to reassure you that the taxes you are paying, you can get these taxes back. How? By doing business with government. So my role as a regulator of public procurement is how do we give back to the taxpayers? One, are you manufacturing products that the government consume? That should be very, very important because, and some of you actually, if not most of you, have benefited by supplying to government. Uniforms and textile, cables and electricals, pharmaceuticals and medicines, steel and cement, and all those. So my role, Mr. Mubiru, is then to provide policy and regulatory framework that will enable you benefit from the 65% of the budget that goes through public procurement. And this we have attained. First of all, the amendment of 2021 that was assented to by the President in June 2021 and gazetted on 2nd July 2021 provides for reservation and preference. What does that mean? It means that some products can be reserved to you. And the ones I mentioned essentially are reserved. If the army or police or prisons or NMS is buying uniforms, they must buy from local manufacturers. If National Medical Stores is buying medicines that are manufactured here, they must buy from here. If you are from pharmaceutical, you are making medicine, and NMS is importing that particular medicine, then sound a warning, raise a complaint to me. Then we can say, no, why are you importing this medicine? When actually we are manufacturing it from here. The same things as electrical. The regulations he has talked about quickly. Yes, you are right. Chairman, you are right to raise that concern, and it is true and acceptable, but we have not been sitting down. As we talk now, actually maybe it could have been even passed by the first Parliamentary Council in the Ministry of Justice. When PPD finalized, we submitted finance. Finance submitted 1 month ago to first Parliamentary Council, because those are the ones drafting. And they have been away for almost a month. I need to get updated. But we are in the final stages of the regulations. But more important in that regulation is that we are legally now translating the guidelines on reservation and preference schemes into regulations. So, and also expanding the products, including products like transformers, like printing, like furniture, and all inputs that go into turnkey government projects. If, for example, you are building, constructing a building like this one, and you're making tiles, cement, steel, then those government projects must buy those products in the country. And the advantages are many, Mr. Mubiru. The capacity expansion of manufacturing facilities. We have seen also the turnover increasing from, we have figures increasing because you are getting, even the budget spent by government on those products increasing. So we are your supporters. If you find that there are products that you need to be reserved, it is a mandate of the PPDA, and we can always do that in support of import substitution and export promotion. I thank you.
Thank you very much. I'll very quickly transit to...
maybe e-procurement, sorry, I didn't talk about. Now, how do you then do business with government? If you have to benefit from the 65%, then you have to register on electronic government procurement. It is, and it is self-registration. And that self-registration enables you, when there is a government opportunity, a government procurement opportunity, you get notification, and then you can participate. You can also access the procurement plans of these government entities so that you can plan in time where you have advantage on the products that you are supplying. So I call upon you that you register on that. Currently, we have, we piloted with 25 entities. This financial year, starting July, we are expanding, we are adding 50. Those will be 75. And within the next 3 years, we'll have rolled over to more than 400 government entities. So please register on that platform. Thank you.
Thank you very much. We are tending towards closure, and I had to end especially with our very own who now migrated to government, Mr. William Okecho. Share with us those interventions that you have at Export Promotion Board for the growth of exports, especially for SMEs, and you give also your parting shots. Then in reverse order, each of the panelists will just share with us in terms of parting shots, so that eventually the last item on our agenda will be to hear a wrap-up by actually none other than Raphael, who is the chief economist of NCBA. Over to you, sir.
Thank you very much, moderator, and the members present. I am very excited to be here, and at the same time humbled. I'm called Okecho Lawrence Michael. I am the Director Trade Information at Uganda Export Promotion Board, but also handling the Directorate of Export Market Development and Promotion. My ED has taken this to be something very, very serious, and actually would have loved to be here. But because he has a concern for you in terms of the markets, he is actually in South Sudan to try to see what is this that we can increase to South Sudan. Now, in relation to the discussions here, Mr. Mwiru, when people are talking, the only thing I understand best is exports and import replacement. So if you make a statement without any of those words, to me, you have actually made noise. Okay. But I wish I should have said this, and I said that people actually don't, some people don't make noise. Now, in terms of export development and promotion for this country, and with specific reference to the interventions that government is doing under the Uganda Export Promotion Board. Number one, exporting is something very interesting, and it is something that has happened time immemorial. It is the form that keeps changing. I want to illustrate this by using the local markets, our local markets in the villages. You know, they're very important. People wake up and I have my goat, I have my 2 tins of maize, I carry it into the market. I sell I get my money, and that's the end of the business. I don't know what that person will want again. Now, for exports, once you engage into exports, number one, ensure you are consistent. What you have to put at the back of the mind is the person you are dealing with has a whole value chain behind that he must satisfy. And any negligence that you do at this point affects the entire chain. Now, that therefore means for us to intervene in this, we have an activity we call export readiness assessment. Now, under export readiness assessment, we look at you comprehensively. What are your strengths? What are your weaknesses? How is your branding? How is your production? How is your finances? And all these things. Now, this is something we do online. There is a self-checker. The funny thing with the self-checker is that you people actually have that feeling that I should say what they want to hear. But the truth of the matter is we want you to tell us what you are, whether they are bad things, they are negatives. Tell us. Our role is actually to polish you up. Actually, you need to emphasize a lot of your weaknesses such that we polish you up. The essence of polishing you up is that when we take you to the export market or when you get into the export market, it is no longer you, the individual, you, the company, it is Uganda. And if you do a good job, they will say Uganda has done a very good job. If you do a poor job, they will say Uganda, and everybody will be put on board, will be lumped together, which is not right. And that's why we emphasize the aspect of export readiness assessment. Now, under export readiness assessment, we identify several other things. It could be standards, and if it is standards, we bring all the people who have issues with standards. Then we shall bring David from the Bureau of Standards to come and polish you up. If it is an issue of finances, we shall say UDC or UDB, Microfinance Support Center, the other financial institutions, NCBA, come over here. There are issues here for you to attend to. So once all these areas are polished up, then we are good to take you to the market. The other thing we do is we also link. We have, for example, under the parish development model, which has actually made our plate so full now, you are producing, and you are producing for who? It is no longer about just producing. You must produce for a given market. It could be internal, it could be external. So we have to identify what is this that you are producing. What does it take for you to actually produce what is required in the market? Don't forget that you are competing with the whole world. We will have an advantage that we must actually take full use of. So that is in the linkage. Now, we get if it is under PPDA, the farmers and the rest, or the manufacturers, we link you to who is going to export what you're producing. So we engage on that, and then we link you. There's this person. Or somebody comes and says, I have been to this place. I have seen this interest. There are people who want this manufactured product. What do I do? Then we now come to you and say, who is export ready, who is compliant, who is consistent, and then we link you with this person, and then you are good to go.
Michael, can I come in?
Yes, please.
I realize that yours requires actually fundamental linkage with manufacturers, just like I suggested for the private sector development unit at Ministry of Finance. And you are our ambassador in government, as you know. Can I suggest that we agree that we will have really a specific session, Secretariat is coordinating, so that you take us through, because I know time is not our best ally, and this is a very fundamental subject we are handling.
I agree totally.
Such that now you can share one parting shot, then we cover all the panelists, because for you, you are home.
Now, my parting shot is under working closely with the Ministry of Foreign Affairs, the Mombasa Consulate. We had an engagement with the coastal counties. And when I was there, I was very excited to find that the roofings was there. So I just ticked the export number box. While we were there, we went to to two factories. One was a food processing factory, and the other was a shoemaking, an international shoemaking company. It is called Jos Sibel Africa. It is an international German company which has established in in Kwale County in Mombasa, and they do top-range shoes. They have written here, I am going to have an engagement with the Secretariat and the tanners. These fellas want, much as the quantity is small, they want 10,000 square meters of leather, and they've given us about 2 weeks. They want to come here and engage the tanners here. So we're going to organize, but we're going to have a pre-engagement. We sit amongst ourselves as tanners with the Secretariat and understand what we need to do. Then after we have done that, we shall call them. They will be able to come here, and then we engage on that. The other interesting thing they've said, which I am somehow shy to say, they want, I don't know how they call the skin of the pig. Whether it is also leather, I don't know, but they want that skin of the pig because they have information that Uganda, you consume a lot of pig. My only worry is people are going to say, but a portion of our consumption is going to be taken out. That piggy skin, the price is very, very good, and it's an area that they want to come and actually engage with us and see how we can actually supply them. For the farmers, there is the network of exporters and producers of Uganda who are based in Zimbabwe. When we went with them there, we managed to secure.
Michael, I have to interrupt you. You are opening up a debate that you will have with Secretariat.
So thank you very much. Let's focus on exports. Whatever you do, whatever you are discussing, as I said, don't make noise. Show the linkage to exports. And with us, we are located, for those who may not be knowing, we are located on Nakasero Road, UEDCL Towers, 2nd floor. We are ready to engage anytime you feel like. You don't need to make an appointment. Walk in, we shall attend to you. Thank you very much.
Thank you very much indeed.
Thank you so much. I would like to say 3 things as I conclude. Number one, I'm feeling a bit left out with the offers you're giving the panelists in terms of the dedicated sessions with the different bodies that they represent. So I would want to suggest that with your permission and in liaison with the Secretariat, that the UIA hosts half-yearly engagement with manufacturers to demystify matters insurance, because
granted,
we can't do.
Granted, don't worry. Granted. Thank you very much.
The second issue I would want to mention is that as we look at insurance, insurance has a social protection aspect. And I know we keep emphasizing the aspect of mandatory insurance is hiding under the laws to try as much as possible to penetrate and increase on our uptake. But I want to say that insurance has a social protection aspect. The intention of insurance also is to protect the vulnerable within society who may not necessarily afford the sort of products that probably the rest of us can afford. If you look at the motor third-party products, if you look at workers' compensation, all these are products that have been put out there with a social protection agenda in matters of ensuring that the vulnerable are protected. And the insurance fraternity has been at the forefront of negotiating for increased compensation rates. Every single person knows that we have engaged the ministry. We are in touch with the Ministry of Gender and Labor on workers' compensation to try and ensure that the compensation rates as indicated in the acts, the different acts, are improved so that they suit the challenges of the day. But also the other thing, and which is the third one, and as I conclude, is the issue of this export guarantee scheme. I think we've focused so much on the political challenges faced in Southern Sudan and the losses that accrued. But the aspect of export guarantees is a lot wider, and the risks associated with export guarantees are a little wider.
And I would want to commit on behalf of the insurance fraternity that we're going to engage with the Secretariat. And as we engage, we must create levels because insurance is about risk management, it's about underwriting, it's about assessment of the risk. We would want to engage and try to assess this risk and see what sort of coverage can we begin with. Because we may not provide the adequate cover that you require, but can we pick out a few risks that can work for us, and therefore we can be able to issue a product that suits the manufacturers. So I look forward to those engagements, but above all, I look forward to the dedicated insurance engagement so that many more of my colleagues can come here to try and put the case out there to demystify insurance. Thank you for the opportunity. My colleagues kindly stand up for recognition. In case of any other information that you require on marine cargo insurance, I have a team that I came with. Please approach the desk for any further engagement. Thank you.
Thank you very much. Thank you very much indeed. Over to you, UNBS.
Thank you very much again, the UMA leadership and our sector players, captains of industry. Again, UNBS is committed to make sure that we work together with the manufacturers to industrialize this country, but particularly to change the balance of trade to begin exporting more than importing. That is the focus the Bureau is doing. As you are aware that we have re-engineered our service delivery to focus. Enforcement now comes at the tail end because we want to make sure that we promote voluntary compliance to the industry because, again, you are aware that anybody involved in putting any product on the market will run out of space soon. You will have nowhere to sell domestically or export because even the supermarkets now, we are demanding them to only receive certified products. So we don't know where your product will go with that tightening ground. So voluntary compliance is the way to go. We are happy to work with UMA to put these producers into sectors so that we can be able to particularly provide specific interventions to address challenges of standard implementation per specific sector of the economy with a focus to SME development. Thank you.
Thank you very much. A round of applause. Over to you, sir.
Thank you very much again. I want first of all to thank the leadership of UMA, led by the chairman, Deo Kayemba, for organizing this, and also really the coordination that you provide between manufacturers and government institutions. Number two, for the manufacturers, please formalize your business so that the taxes you pay to government, you can get a portion of it when you do business with the government. Lastly, I want to, this goes to the Minister of Trade and Industry, Emmanuel. The public procurement essentially is not only focusing on manufacturing, because manufacturing is mainly supplies, but also there are works and services. And when we talk about these protocols, the African protocol, the East African protocol, we need to harmonize the parameters, especially preference parameters. You'll find a contractor wants to do business in Kenya is stopped. A Kenyan is given preference compared to Ugandan. So I want to call upon those who are at the center of it as we have these conversations to consider public procurement preference parameters as part of the protocols. I thank you.
Thank you very much. A round of applause. Mr. Kagwa, please. He will come in last. He's at home. He was with UMA, so he will come back. Mr. Kagwa, please.
Just to thank the UMA board and management for organizing this symposium. There are a lot of takeaways which I've been noting down. One of them is, of course, continuous engagement with private sector so that we understand each other. We commit that in policy formulation, we shall be consulting you. We may not agree with you, but at least the consultation process, yes, that one, yes, I commit. Because there could be different reasons. But I also want to encourage our manufacturers in the same subsector to work together and make a joint presentation, because that usually helps us when we know that the members are aligned. Instead of giving an enterprise position, we give a sector position. There we can move. Finally, also to tell you that, yes, you should really help us in implementing this budget for this financial year. It has a lot of good strategies, especially for the private sector. You look at the policies that were pronounced. It should be able to drive this country forward. Last financial year, we projected that the growth of our economy, or the economy will expand by 4.5%, which is modest but is good. But then going forward, we expect to rebound to the 6 and 6.5 over the medium term. So, but there are opportunities, because when you look at the economies, once they're expanding, the opportunities under the parish development model, the opportunities under the oil and gas sector, the opportunities in our support to the private sector for development. So please, let's embrace the budget going forward. Thank you.
Thank you very much. And finally, Commissioner General, URI, please.
Thank you very much, Richard, and all the members who have participated in this great engagement for this opportunity. I think there were two questions which were raised and were supposed to give comments. Brian spoke about the goods that are manufactured for markets outside the EAC that end up here. I would love to have more information from you, Brian. Of course, this would be breaking the law and would just follow up with enforcement. But also Simon raised the issue on DTA stamps, and we've been engaging with Simon Kahero on this issue. I would also love to listen more to that report, because the issue of the cost of stamps is one of constant engagement. Fortunately, the government signed a good contract with the provider that the cost of stamps will always be reviewed upon reaching certain threshold in the number of stamps being consumed and upon a passage of time. So we will engage until we get a fair deal for the stamps. But the value they add to the process is definitely not doubtable. They add a lot of value, but we can work together as partners to achieve a fair price for Uganda, just like the other nations he was giving. Now, in terms of takeaway from this engagement, as Uganda Revenue Authority, I think we are very, very happy with this kind of engagement. We're looking forward to further engagements of this nature, because we are true partners in this effort. And as I mentioned earlier, if there is a sector that has potential to catalyze the quick development of this nation, it is the manufacturing sector. And we really have to appreciate government. Government has gone out of its way to make this sector as conducive and as attractive as anything can be. So in terms of investment, I think you are in the right place, where you have a lot of government support and you have a virgin market to supply. So if we work together on issues of compliance, which is the main issue, we'll be able to move fast. So I want to take this opportunity to invite the members of the manufacturing sector to embrace the initiatives we've put in place to ease the compliance in terms of tax assessment and payments. The technologies of IFRIS, very, very critical. Because once you start off on the right page of IFRIS as a manufacturer, that chain will not be stopped up to the final consumer. The one who buys with you and goes with an IFRIS invoice must also issue one. And that is a very good process. So I really want to ask our partners, please embrace IFRIS, please embrace DTS. We will continue to work together on improving the efficiencies of these new technologies. Like anything new, it may be having challenges. We can work together. Please embrace ADR. ADR is the alternative dispute resolution. Don't go into court with URA and waste more money on lawyers and 10 years. I wanted to commend KPMG, not that Peter helped me, but I could also make a good return here and commend him. One of the cases we've been handling with KPMG led us to recover 99 billion from one taxpayer, and we had been in court for about 3 or 4 years. So why can't we resolve all these tax disputes under ADR? It's a provision provided for by the law. It saves your time and money. It saves our time and money as tax collectors, and government moves forward. But not just KPMG, all the ethical and professional tax agents, use them. Let them do the hard work of advising you. Please keep away from any tax agent or any tax collector for that matter who lies to you that I can settle this issue. Give me some money, I will reduce the liability from 1 billion to 100 million. That one is a liar. He'll eat your money and you'll pay the full tax. And these are the people who actually cause us now to go for 10 years. Because once we start the audit and we find that there was some falsification, change of ledger positions, then we have to investigate that fully, and that increases your burden. So compliance, compliance, compliance. Let's work together in being compliant and embracing the technologies that we have put in place to achieve this. I thank you very much, and as I conclude, my brother Daniel Birungi quoted a scripture which we are most obliged to go by. All of us have sinned and fallen short, we agree. Even us as tax collectors, we have fallen short. But it's a new setting now. At URA, you will not succeed when you try to get bribes to compromise the tax position. We have fallen short, but we have reset. We are moving forward by exhibiting total integrity. Please, our taxpayers, meet us halfway. Also, reset. We can forget about the past, but really going forward, there is no excuse. So when we penalize you 100 million for falsifying tax stamp, that is not about the past, it's about the present. Apply the tax stamps, apply IFRIS correctly, and that way we can develop our nation together very, very fast. Another issue that concerns the manufacturing sector is refunds, if time allowed. But refunds will be very seamless once we use IFRIS. I traveled yesterday from Dubai, and I had had an experience before. If you buy anything in Dubai, you're entitled to a tax refund. But at the airport, they would say, bring the evidence, open your suit, we see if this suit or phone is there. I was shocked. As I traveled, I showed them my receipt, and they said, go there and get your cash. Seamless. Why? Automation. Now systems speak. IFRIS in the shop speaks to the taxpayer. Then immigration speaks to the taxpayer. He said, this man entered yesterday, he's leaving today, so he's entitled to his refund, and then you get. That's where we should go, ladies and gentlemen. Thank you so much. May God bless you.
Thank you very much. A big applause for our panel as they take their seats. As they take their seats, and I request them to bear with us because we have one item, and that is the wrap-up by Mr. Raphael Agung, the Chief Economist of NCBA Bank. Please receive him.
Thank you so much. That was such a distinguished panel. I'm conscious that you've been sitting since 8. It's slightly over 1 o'clock, so it would be remiss on my part to go on and on and on. And the economists in the House will tell you that we generally do have a lot to say, even on very small matters. So I'll try to be very mindful of that. Now, it's been couple of hours, and for me, flying in from Nairobi, I would say I've had a very fascinating education in Uganda's industrial policy. Of course, we do desktop research, and we pay attention to the region. Uganda is a key pillar of the EAC integration efforts, and so any economist will tell you that we do pay attention to Uganda because it's of that much consequence, but no amount of research will beat what I just went through this morning. So thank you very much, all the speakers. It corroborates most of my reading, or at least my understanding of Uganda's economy and history. So it's very, very pleasurable for me to actually learn that some of these things that we do think about and write about are corroborated by actual practitioners and in a very meaningful way. Secondly, just to upload the government representation. I think the Uganda Manufacturing Association have done a fantastic job. Where I come from, the kind of representation that I have seen today is testament to commitment that perhaps is showing in some of the results that are pointed out. If you read the concept note, for instance, you'll see some of the numbers that the association has put out, and it's testament to at least government engagement. Now, I'm going to be very humble, and the reason for my humility is just one. The key measure for manufacturing importance in any economy is traditionally the size of manufacturing contribution to GDP. If you read the concept note, or if you pay attention, Uganda is slightly over 16%. My own country, Kenya, has been struggling at about 9% for as many years. All right, so if you look at our Big Four agenda, the goal was to improve, rather to increase manufacturing contribution to GDP to only 15%. We barely made double digits. So I'm mindful that I'm talking to bigger contributors, and now in proportionate terms, of course, Kenya is a slightly larger economy than Uganda, so I take note of that. But in proportionate terms, that should inform some humility. Now, having said that, it's important to contextualize what the questions of manufacturing, and especially if you look at the budget as read, 2022-2023, very heavy on agro-industrialization, of course, targeting questions including market access. So in terms of capturing the zeitgeist, I think the minister or the ministry, and the representatives here, was spot on in terms of capturing what the development priorities for the country ought to be. Now, because I'm talking to manufacturers, I think the easiest thing to do is to look at who has succeeded in manufacturing and why. And if you list any 10 top manufacturing powerhouses, there's no question that whatever metrics you use, China still remains by a whopping margin a big manufacturing house, of course, very slowly followed by the US. It's no coincidence that those two countries also are the largest in terms of just GDP numbers as at now. So the interesting portrait, and I'll forget about the American model because I think we are familiar with it. If you look at the portrait of China's manufacturing, the ingredients of it are very, very readily visible in the NDP3, Uganda's NDP3. So what do I mean? There's an interesting study that, and I guess it's important to point out that China is a very complex economy. So I'll be highly summarizing, and some of that may be lost. But the reality is the ingredients in that portrait are very visible to me in NDP3. What do I mean? So it was special economic zones, FDI, massive urbanization, create space for that, and then target agriculture as a first instance for agro-processing, and that drove China's manufacturing. If you contradistinguish that with India, you'll see interesting reasons why India perhaps only stays back at 3% manufacturing contribution in terms of global numbers, and explains China's success. Now, I see those in NDP3. I see, and the minister did speak about it, I was here, I do see a targeted and very deliberate effort to raise the business parks to 22%. That's equivalent the special economic zones, all right? 22 of them, I think he did mention. I see a very conscious note of manufacturing as an export answer to some of the questions, including the foreign exchange. So for instance, I have seen, and including in this budget, there is a very determined policy to drive the component of manufacturing exports as in proportionate terms. So whichever way you look at it, the portrait is pretty much the same. What that means to me is that in terms of a policy blueprint, we are onto a good space as Uganda, as the region, and that should be loaded. That's one. The second thing to point out is, and this is often forgotten because we are talking about, sorry, I won't refer to the slides, it's okay, I don't want to tire guys with it. The second thing to forget is we've just had the biggest macroeconomic shock. And in hindsight, and still ongoing, I mean, you're all in masks, so we never used to be like this, but in hindsight, you can see that the region, Uganda particularly, and even my own country, we scraped through fairly decent, despite not having significant shock absorber for the macroeconomic chart in swing. But the reality is that macroeconomic shock has now left us with a legacy that's moving us into very uncharted territory. And the only point I wanted to make in addition to what I've been said is, in terms of industrial policy, I cannot see any addition to what has been illustrated here by different practitioners. The thing is just do it. And of course, the only ingredient that I can add there is perhaps with regards to the difficulties around constrained fiscal spaces. You've seen the resource envelope. I did read the budget. I've read it innumerable times. It tells you that the resource envelope is pretty constrained. And this is true for every country, including Kenya's. Now, with that in mind, the public-private partnerships becomes crucial as an allocative and resource-raising mechanism to deliver on what I think are largely discretionary spending and even non-discretionary, assuming that you get another shock. So just in terms of positioning manufacturing to deliver on these budget priorities, but keep in mind that this budget is just a fiscal allocative mechanism for the NDP3. So if you go back to NDP3 and its priorities, it will then tell you that the PPP argument or the PPP emphasis that are laid here needs to be really energized. That's all I can add there. But to close, and I promise to be very brief, all that has still left us with a lot of work to do. Of course, the budget handles our fiscal matters, so today we're talking fiscal policy, and I can understand why we're a bit mute on the monetary policy side. Relatedly, of course, we did a lot of detail as manufacturers want to do, talk about industrial policy, which for me has been very fascinating in terms of just the learning and confirmations. But what's forgotten, and this is stated a lot in the policy documents that you see from Uganda, and I think I have to commend whoever writes Ugandan documents. Very, very well written in comparative terms, okay? Now, they mention, and peace and stability was mentioned as an ingredient to all these development and economic and growth priorities that we are talking about. That's a useful thing. But they quickly mention macroeconomic stability. Now, nobody has today, I guess because of the subject of the day, emphasized that enough. Now, for the last 5-7 years, the region, including Uganda, has enjoyed significant macroeconomic stability. That includes the exchange rate, the interest rate. Yes, I do know that lending rates are pretty high. Manufacturers will agree. But if you look at the stability there too, it's been pretty stable. The Uganda shilling particularly has done dramatically well. I guess in the last 3 or so months that has changed. So we're seeing significant, but that's so different from other currencies. But inflation, all the macro variables that you look at, there has been stability to this point. Now we are on the cusp of a significant change. And because we've had stability for so long on the macro front, I think we risk forgetting the fact that it's a key ingredient to any development strategies that we'll put in place. All right, so you are going to face a situation where because the external environment, and we've talked about Russia, Ukraine, We've talked about prior to that just the dislocations around the supply chains with COVID. It's aggravated. And if you see, for instance, developing world, OECD inflation numbers are skyrocketing. America is north of 9%. I have never seen I'm reasonably young, but I've never seen a situation where American OECD inflation is higher than my own countries, okay? So what that tells you is that the external environment is going to change in such a dramatic way, while when COVID 2 years running and 3 years running has depleted our shock absorbers. So my only risk that I wanted to point out, I'm saying this advisedly, is that for policymakers in the room, please let's pay attention to the macro risk scenarios that will shortly be unfolding or is already unfolding and the implications therefore. And I'm very, very heartened to see that the Bank of Uganda is very mindful of this. So in an extraordinary meeting, I'm sure you all saw this, and when central bankers typically are very conservative people. So if they schedule meetings, for them to call a meeting in between, it suggests to you urgency. And I think it tells me that the thinking in the BOU is very, very clear about the urgency of this. And so in the extraordinary meeting where they did raise the central bank rate, and the CRR, it suggests to me that at least somebody seized of that. But I just need to emphasize that macroeconomic stability is a key ingredient to whatever development plans we've laid here, including the allocative mechanism we designed in this budget and consequent budgets. So it's important for policymakers to, both in terms of transmission, but also just shaping expectations to manage that in ways that at least from the MPC decision that was given to us by the BOE tells me that at least this is already ongoing. So thank you very much. I hope I have not gone on and on. I was mindful that you are tired, but thank you so much for this engagement, and I have personally learned a lot from this. Thank you.
Thank you very much, and I think the wrap-up was really deep on economics, and we've gotten an understanding of where we are. At this juncture, we've come to the end of today's program, but there is one final presentation which is to be made by each of you before a plate at lunch. So it is my honor to invite you to join us for lunch as we leave this room shortly. Right before that, I'm informed that there is a group photo to be had just outside to commemorate. We will have it right in front of us here. In Japan, they say no photo, no meeting. And so as part of our accountability to our board, we have to present this photo. So please allow us to have our jobs as well. Just a few housekeeping announcements. Lunch is served. The coupons will be handed out as you exit the room at the registration table. That's number one. Number two, we've had a big discussion on special economic zones. And in partnership with the Uganda Free Zones Authority, we will be having a session on the 21st of July at Imperial Real Hotel, where we'll have a sensitization on the benefits and opportunities under the Free Zones scheme. So for those of you who have questions about how do you participate in this, how do you take advantage of it, on the 21st at Imperial Real Hotel, we shall have that engagement. Lastly is to join you in appreciating the panelists who made time for us today. It's really, as you've heard from our colleague from Kenya, it's not so often that you have all these government agencies represented here at the very top and sitting with us from the beginning all the way to the end. That's something we don't take for granted, and this is a partnership we will continue. For those of you who had questions, we're going to have specific engagements with each of these agencies where you will have a chance to ask all the questions that you would like to have. These interactions will be announced in advance, and you will have a chance to participate in them. For now, I wish to invite you for the group photo at the front. The panelists, Mr. Chairman, together with the panelists, please come up front. And please, the rest of us, let's join, let's stand behind and have this group photo, and then we will move on to the lunch session. chairman and the panelists sit. Chair, please sit. Please sit. Go behind the chair. Yes. Congratulations. Please, let's join the photo quickly so that we can move on to lunch. Yes, I will announce and then we'll breathe in. Although you are at liberty to retain your mask if you feel it's more comfortable, that's also fine. Okay, I think in 3, 2, 1, breathe in, hold your breath, and let's the camera people do their work. Please alert me when we are done. All right. Thank you very much. So please join us for lunch. At the registration table, you'll pick up a coupon for lunch. You're not Yes, how are you? I'm all right, sir. How are you, sir?
We are there.
Yes, sir.
I'm seeing you come.
Come, please.